This year, we think it's a story about broadening.
We're in a period where investors can have more confidence.
The key issue here is really on the risky asset side.
There's just more vulnerability on the volatility side.
We want to stick with earnings, which we think are going to be the driver of equity markets over the course of this year.
Bloomberg Surveillance, live from Davos, with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from Davos, Switzerland, for our audience worldwide. Good morning, good morning. The World Economic Forum taking on a new dimension. Davos interrupted Wednesday morning here in Davos, Switzerland. The President of the United States addressing this forum, addressing the world, addressing the nation. Affordability in focus, but I have to say, the smell of tariffs hanging in the Swiss air for the last few days.
Yeah, this really has been dominating the entire conversation. A question around the NATO alliance, a question around exactly what the U.S.'s role will be, and a question around how much the geopolitical fault lines are changing at the same time that business is booming.
Typically, they spend months, maybe 12 months, planning the agenda for an event like this. The president's got his own ideas about what the agenda should be, and everyone's getting in line.
Absolutely. He's really coming here as a disruptor. And you talk about this speech he's going to be giving. It's really twofold if we think about it. He needs to address the everyday consumer in America ahead of the midterm elections. That is President Trump's North Star this year. Talking about affordability, maybe lambasting what he would call the global elite by veering off that path and not thinking about the everyday man. At the same time, for many people, they find that this Greenland issue has just been an absolute distraction to the Davos agenda.
Our North Star here at Bloomberg Surveillance, one thing, financial markets. Check it out so far this morning. Equity futures down and down hard. Bonds selling off, Treasury yields up, the dollar weaker. That is not a great mix. A reminder maybe of what happened last April. But it's not just the US bond market. Bramo, we need to talk about what's developing in Japan. Check out the long end of the curve on Japanese yields. 10s, 30s, 40s. We're talking about 20 basis point moves out of Tokyo.
The 30-year yields over in Japan have seen an increase of 38 basis points over the previous two sessions on a proposal to potentially A, hold snap elections, and B, also increase some of the assistance to the nation. A real question here about how much what we're seeing in the U.S. bond market is being driven by Japanese bond markets introducing more volatility, and how much this has to do, exactly to your point, about the Sell America trade going back to Liberation Day.
There's certainly a Sell America flavour to the price action this morning, and we'll get into it. We talked about this, Annmarie, non-stop last April, and we're seeing it again. Yields are up, but the dollar's weaker. You mentioned gold a little bit earlier when we were planning the programme together. Gold's rallying, silver as well. These are the kind of things that don't speak well to the policy coming out of the White House.
Well, I was on Air Force One right before the president reversed track, and I asked him about the Trump put, and it was a question he didn't like. And he always talks about how he sends out his Treasury Secretary, Scott Bessent, to soothe the market. Well, guess who is standing in Davos this morning, soothing the market, comparing the consternation we saw on April 2nd on Liberation Day to what is happening right now. And the Treasury Secretary says this is the same kind of hysteria. And he's urging everyone here to sit back, take a deep breath, and let things play out.
We're taking a deep breath. Hopefully at some point in the next week, might find out who the next Fed chair is.
Okay, that could
it
happen
was
next
2
week.
weeks. Now it's a week.
Okay.
Like we're shortening time horizons
exactly.
here.
And this is what people are banking on here for the optimism, because rate cuts will save everything.
Coming up this week, fantastic lineup for you. We'll catch up with the Morgan Stanley Chairman and CEO, Ted Pick, the Bank of America Chairman and CEO, Brian Moynihan, the US Commerce Secretary, Howard Lutnick, and a whole lot more. Plenty of questions for the Commerce Secretary, I imagine, coming from the European side as he touches down in Switzerland.
Yeah, 200% tariffs on champagne. Is this a reality? Exactly how far are you willing to go at a time when relations are increasingly fraught?
We begin this hour, though, with stocks falling worldwide. The standoff between the US and Europe presses on. Joining us to kick off our coverage here at the World Economic Forum, Vis Raghavan, the head of banking at Citi. Vis, good morning. Good to see you.
Good morning.
I want to start by thinking about where we were 12 months ago, like peak optimism around America. Everything's going to be fantastic. In markets, it was. Is that all we're looking at? Has something changed in the last 12 months?
Look, it was inauguration week, right? Last time we were here, and you could just, it was palpable how leaning into America, pretty much, investor sentiment. Everywhere you looked, it was, all roads lead to America. I think that U.S. sentiment is unabated. I mean, if you even look at markets today, all roads continue to lead to America. Capital formations are happening there. Liquidity is all, flocking there. You've seen the markets. And I think the only wild card is macro, geopolitics, and everything that you guys said.
We've got to ask, though, Vis, does it really matter? I was looking at a PwC survey that was released yesterday, where they literally survey hundreds and hundreds of CEOs, and they asked them to pick the region they're most excited about. 35% America. Without doubt, the leader. That was up from last year from 30%.
Yeah.
Doesn't that speak to the kind of economic activity you and the guys are seeing on the ground at Citi, the pipeline that's building into 26?
I mean, the pipeline going into this year is one of the strongest I've seen. And this is across the board. So this is not, typically you have years where tech is doing really well, and then some years healthcare, and you see the contrarian, defensive sectors come in. Across the board, every sector, you're seeing a real desire to do deals. And then you have this AI overlay where every company is looking at, what are the what's my AI nexus? How am I going to get more efficient? So, it's a incredibly potent deal environment. And it's and all the drivers, there's so much liquidity also, which is driving this kind of deal frenzy. I think at least from a market point of view, that looks like it's going to be staying up for a while.
We'll get into the pipeline, but you keep talking about how the only thing that could disrupt it is geopolitics. And then a lot of this deal activity is stemming from easy market conditions that have completely ignored geopolitics. What would you see that would start to make you think, hold on a second, maybe it matters a little bit more than chief executives are talking here?
But let's go back again to this Davos last year. We said tariffs was the headwind. And we were really worried about it. We were spooked. And then net, the market found out. I mean, April, remember, there was just total hiatus. Everything stalled. And then there was this savage rebound. What tariffs showed us was there's a path. All's well that ends well. There's a path. There's this shock and awe. And then you land somewhere which is reasonable. And then you shrug and you kind of move on. The tariff thing has been pretty much assimilated, until the recent kind of, new tariff saga. The tariff stuff had kind of, folks had digested, 10% was a base case, up to 20% I can assimilate and digest. If it's 25, 30, then do I kind of rejig my supply chains? Do I make in America? Do I nearshore, offshore, friendshore? So that played out. Then you saw, the whole kind of, Venezuela market shrugged off. Then you saw the whole card thing, market shrugged off. So fundamentally, what markets are saying is this will also land. The final outcome may be, different from, the first shock and awe. And hopefully sanity prevails, and then you'll find some, a compromise, and, folks will have to adjust, and then this will land well. So, you may talk about, is this complacency? Are we sleepwalking into something? Who knows? But history shows us that, yes, we will get there.
Your team saw an 84% increase in advisory fees in the fourth quarter, year over year. It has been an incredible blockbuster amount of issuance. You see a similar year shaping up. How much is predicated on rate cuts coming from the Federal Reserve?
I think it's not entirely predicated on rate cuts. I think rate cuts helps. But it's really driven by there is an underpinning of equity valuations. If you look at where equity valuations are, and multiples have gone up, but earnings have kept pace. So net, earnings have kept pace with the valuations that you're seeing. But this puts a lot of pressure on boards, on management teams to show growth. And if that growth is not forthcoming, then you get punished. Whether it's activists, whether it's your shareholders, etc., they vote with their feet. So that growth has either got to come organically, or if it's not going to come organically, I've got to go buy. So which fundamentally then you have this melting pot, like, $2.5, $3 trillion of private equity firepower, which, they incentivize to deploy that capital. So effectively, you have so much buying interest that valuations and share prices are underpinned, because if you like something at 100, you like it even better at 80 and even better at 70. So net, there's a better buyer for those assets. So that M&A theme. And, last year was a great year for the street. Citi had a fantastic year. That M&A theme is going to continue, bar some geopolitical kind of, because this is entirely about confidence. Valuations can go up and down. You will adjust. But if that confidence goes, then effectively the shutters come down and things will stall and come to a halt.
How confident are you in potentially seeing a Trump credit card that banks might roll out that's capped at 10%?
I mean, look, I think when you look at the point in question here is affordability, and we all agree that that is got to be dealt with, and we are all in consensus on that. I think the key on capping rates, etc. The question is, what you don't want to do is, squeeze out or drain credit from exactly that section of the population that needs it most. So, once again, this will land somewhere, and there'll be an element of adjustment and compromise, and we'll be fine.
I have to bring it up because today is January 20th, and it's the self-imposed deadline by the President of the United States that he told banks needed to adhere to this. Is Citi in touch with the White House, with Congress?
Absolutely, we are in constant communication with various policymakers and the like, and the industry too, because it's not just Citi; it is the old street that is, And once again, I think affordability thing is something that has to be dealt with, and we will land somewhere.
And it's something that's going to come up, no doubt, in the address from the president in the next 24 hours. Just let the record show, you brought up the credit card issue. We didn't. You went there first, OK?
Yeah.
I just said,
I had every right to follow
that was before. That was in the warm-up session.
You went there. I think the bulk of this conversation so far, and I'm sure you feel it, reflects on the environment and the backdrop and not execution. And that's unfair to Citi. And I want to get into that. Jane sent out a note that was widely circulated in the last few days, and it was about the vestiges of old habits falling away. Can you breathe a little bit of life for the people who aren't working at Citi, just into the story of how execution has changed at the bank, how you're building the wallet size when you get a deal? What's happening?
Yeah, look, I think this is a high-performance mindset. You've seen incredible work done by Jane and the leadership team on transformation, on remediation, and really setting this company up, for the future. What you saw through last year, and also I think the quarters before, it was a demonstration. It was a taste of the earnings power of the company. So whether you take banking, we were up 35% in revenue, and you saw 85% in M&A. Markets had a superb year. You saw the same in wealth. You saw the same in TTS, in services. It's globally one of the premier platforms. So what you're seeing is a real focus on making sure that this is our time, this is our moment. We want to be leaning in and absolutely kind of driving.
What does that mean in practice, though? Because you talked a lot about the results. I'm really interested in the approach. You're banging down the doors of potential clients, more face-to-face meetings. What are you actually doing in practice?
I think it is really
changed?
One Citi. So it's really being joined up across banking, across markets, across services. So clients see a uniform, coordinated, one Citi approach, where through a single point of entry, they're absolutely savoring the best of what Citi has to offer, which means businesses over-communicating, businesses joined up, taking calls for the whole, not just what is in one's own kind of myopic interest. Second is really around making sure that we are both getting our fair share and making sure that we are earning, i.e. through content, through ideas, through intensity, making sure we are earning our fair share. And the two are kind of linked because we have incredible relationships globally, probably the premier truly global footprint. We have lending relationships, we have services relationships. The question is, what are we missing? What business are we not doing? And making sure that we're all organized to go after that. And a lot of that you have to earn. So it's not just about demanding it, it's about, absolutely making sure that we are earning every piece of business.
Jane's also talked a lot about cutting staff, and there have been some pretty big job cuts at Citigroup. How much are you replacing some of those roles or fortifying some of the front office workers using different artificial intelligence programs?
So two parts to that. One, the cuts, et cetera, is something that, we'd flagged a long time back. So that's just systematically executing against what we said we would do, and I think that's panning out. AI is becoming absolutely entrenched in pretty much what we are doing and what we want to do. The easy wins have been around whether it's processes, whether it's been around maker checker, fraud prevention, controls, AML, all of that has been easier to get ramped up. The work in progress, and this is really kind of and this is true probably for the whole street, is around the front office, creative, innovative idea generation, out of the box. And this is true, of banking. What can if you're the CEO or the CFO of a company or the board, what can I tell you that you don't already know. What is innovative? What is creative? And remember too that if I can run AI, the company can also run the same AI algorithms, and so it's a constant race to be more creative, more innovative, ahead of the pack. And I think that is where a lot of dollars are going in. And there you also have to be smart. In some cases, you want to be early followers, not early adopters, because this is expensive. So I think the key is to be smart, nimble, and very curated in how you approach it.
Any thoughts on Greenland, or have you got to go? You should just say we've got to go.
We have to go. I think
it's good to see you. Thank you, sir. Congratulations on the last quarter. Looking forward to catching up later this year.
Thanks for hosting me. Yeah.
Thank you. We appreciate it. Vis Raghavan there of Citi. Let's get you an update on stories worldwide. The news flow, absolutely unbelievable over the last 24 hours. With that, with your Bloomberg brief, here's Frankiewicz. Hey, Vonnie.
Good morning, John. Thank you. President Donald Trump saying he will meet with several parties in Davos over his plans to take control of Greenland. The president said he had a, quote, very good telephone call with NATO Secretary General Mark Rutte and told him, quote, Greenland is imperative for national and world security. Treasury Secretary Scott Bessent said President Trump could announce his Fed chair pick as soon as next week. Speaking in Davos, the Treasury Secretary said BlackRock's Rick Rieder, National Economic Council Director Kevin Hassett, Fed Governor Chris Waller and former Governor Kevin Warsh are the final contenders to replace Jay Powell as Fed chair. A personalized cancer treatment developed by Moderna and Merck helps prevent the recurrence of high-risk skin cancer after 5 years. The company is saying patients with severe melanoma who got the injection, along with Merck's cancer drug Keytruda, were 49% less likely to die or have their cancer return as those who received only Keytruda. And that is your Bloomberg Brief. John.
Hey, Vonnie. Appreciate it. More from Vonnie in about 30 minutes' time. Up next on the programme, reigniting trade tensions.
I don't think they're going to push back too much. Look, we have to have it. They have to have this done, so we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
Live from Davos, Switzerland this morning. Good morning. What a start to the price action following a long weekend stateside. Here in Switzerland, waking up to this. Equity futures down and down hard. Bonds selling off, Treasury yields higher by 6 basis points or so. But it's the accompanying dollar weakness that reminds you of early April and Liberation Day and the risk aversion we saw around that period. Are we seeing a repeat as the president threatens many nations attending this get-together in Davos this week with more tariffs?
There's a speculation that some of the volatility is coming from Japan, but I think you are absolutely right to point out the dollar trade. If you also see the disruption in U.S. bonds versus, say, German bonds, it is a more significant sell-off in that typical haven trade. So the flavor, the whiff of Liberation Day type of sell America trading, unclear how far it will go as United States traders wake up.
There was a sense to some extent last year that the price action constrained the president, that if there were guardrails over what happened with policy, it was in the bond market. And maybe we got a hint of that from the Treasury Secretary a few times through last year. Is this the start of something bigger just to push back in financial markets?
Well, the Treasury Secretary says this is the same hysteria as April 2nd, and everyone needs to take a deep breath, calm down. There will be potentially maybe an off-ramp. Remember, it was the bond market that got, quote, yippy that the president talked about. Then we saw him reverse course, because the question always was, is this the new rules of the road or these negotiations? And I think at the moment he's coming to Davos, Switzerland with shock and awe, but potentially setting up new negotiations.
Many people will be sitting there thinking this morning, looking at the Bloomberg terminal, you know what, I've seen this movie before. I'm conditioned. I know what happens next. You buy the sell-off. We rip into year end. Are we going to see a repeat of last year? What's phenomenal is, yes, a lot has changed with policy, but markets have been totally OK. And just to reflect on the conversation we had with Citi just moments ago, listen to them talk about the pipeline and the optimism for the American economy, and then compare that to the front pages of the European newspapers about a breakdown of the transatlantic relationship. Does something have to give here?
Well, it feels like there is a dichotomy right now between the optimism that we're feeling and hearing from CEOs and the C-suite more broadly. Consumers are spending, markets are freely operating. There is a sense of growth around the world versus these sort of catastrophic new world order types of questions. The issue is, and Vis Raghavan actually really highlighted this well, in the past, volatility tied to geopolitics never lasted. So people are ignoring it more so at the same time that people quietly are saying they're diversifying away from the United States. You're hearing that more. So that's actually something to pay attention to.
Day one of coverage for the Bloomberg Surveillance team here at the World Economic Forum in Davos, Switzerland. Under surveillance this morning, reigniting trade tensions.
I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can't protect it. NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
That was the President of the United States ahead of his appearance in the next 24 hours. Joining us from Washington, Tyler Kendall. Tyler, the President setting this agenda on fire. His approach to tomorrow, what do we know?
Yeah, John, good morning. I mean, President Trump is really just ramping up the pressure as he heads to Davos. That speech tomorrow now slated for 8:30 a.m. Eastern. And though he is abroad, of course, we know that he's going to be focusing in on some domestic issues, including that his NEC director, Kevin Hassett, has already previewed that he's going to roll out a plan related to letting Americans use and pull from their 401k for a down payment on homes. But even so, it is hard to ignore that he has only been ratcheting up the disputes as he heads in to the World Economic Forum. And even in just the last few hours, as European leaders are reacting to his latest threat of a 10% tariff by February 1st against those countries that have rallied around support for Greenland. And it appears now that issues are dovetailing after French President Macron raised concerns not just about Greenland, but also the White House's proposed Board of Peace in Gaza, which a person familiar tells us this president is looking to finalize this Thursday, where you are in Davos. But in response to the French president's concerns, President Trump is now floating a 200% tariff against French wine and champagne. While it remains to be seen if that is actually going to come to fruition, it is just the latest dispute after a weekend of escalation, as Bloomberg News now reports that the EU is considering pulling out of its trade deal with the U.S. and weighing its own retaliatory tariffs. Now, John, I think it's worth mentioning here that all of this comes after a week of meetings here in Washington, where administration officials met with officials from Greenland and Denmark, and that was considered to have gone relatively well. They actually set up working groups to keep the diplomatic channels open, but it is clear that President Trump didn't feel that way. John, of course, we're going to be watching those remarks, but also who he does and doesn't meet when he visits there in Davos this week.
Tyler Kendall with the latest in Washington. Tyler, thank you. If you want to upset the elites in Davos, Switzerland, tariffs on champagne, one way to do it maybe?
That's definitely one way to do it, especially if you want to come into really with a bang. Also, the tariffs Trump is talking about, they might get overturned this morning at 10 a.m. when Supreme Court has a decision day, an opinion day, and we might get that decision. So basically, he's talking about tariffs that we don't even know if he's able to use legally.
We've got a packed agenda here in Davos, Switzerland, happening right now over at Bloomberg House. Bloomberg editor-in-chief John Micklethwaite sitting down with the Anthropic CEO, Dario Amodei. Let's take a listen.
Or superhumanly good at recommending shopping or ads or various things like that. Anthropic has focused, I think, first and foremost on enterprises, developers, and to the extent we do consumer, we're very focused on productivity and the kind of high value end of the consumer work. And so that gives very different incentives, right? If you want to get things done. We talked about AGI and superintelligence before. One of the things I would say is that, there are superintelligences today, and they're basically large corporations, right? They're smarter than any human can be at, solving the problem of, shipping commerce at the lowest possible cost, or making solar panels at the lowest possible cost, or launching rockets at the lowest possible cost. And so there's really high returns to intelligence in this area, which I think incentivizes us to kind of build the right thing. It's also, I think it's a business that is more stable than consumer. We don't need ads. We don't need, large numbers of free users. We can just very directly create value, right? There aren't all these weird externalities of like you're prioritizing engagement, you're prioritizing these other things, you're generating all this slop. We just make stuff that people can use.
A year ago here, you said the Chinese were catching up a bit. Do you think now the Chinese have fallen behind?
I think they never really caught up that much. So, of course, there was this huge excitement around DeepSeek, right? But, the truth was a couple things. One, those models are very optimized for the benchmarks. It's actually very easy to optimize a model for a finite list of benchmarks. When we go out into the world, right? When we're competing against other companies for enterprise contracts, we see, just honestly and candidly, we see Google and we see OpenAI. Every once in a while, we see a couple other U.S. players. I have almost never lost a deal, lost a contract to a Chinese model.
But now you have the Trump administration, and I think you've already protested about this, giving high-speed chips, NVIDIA chips to the Chinese.
That's right. That's right. The thing that is holding them back, and they've said it themselves. The CEOs of these companies say it's the embargo on chips that's holding us back. They explicitly say this. And now, indeed, there are some policies, and I hope they change their mind, to explicitly send not quite our latest generation of chips, although it was reported that even that was being considered, but the generation of chips that's just one back, that's still extremely powerful. And we are many years ahead of China in terms of our ability to make chips. So I think it would be a big mistake to ship these chips. The analogy I've thought of, if you think about the incredible national security implications of building models that are essentially cognition, that are essentially intelligence, right? I've called where we're going with this a country of geniuses in a data center, right? So imagine 100 million people smarter than any Nobel Prize winner, and it's going to be under the control of one country or another. So I think this is crazy. I think it's a bit like I don't know, like selling nuclear weapons to North Korea and bragging, oh yeah, Boeing made the case.
So your friend David Sachs is basically arming the Chinese.
I wouldn't refer to any particular people, but I would just say that this particular policy I think is
akin to
is not well advised.
Another issue in this, you could be right. All this technology be going in the right direction, but economically we could be heading towards a bubble. Do you think that's true?
Yeah. So I would separate out the two things. One is the basic exponential. And that's what we've been talking about. That's been kind of the technological direction. And there, just like with Moore's law, you can never be sure that the technology is sort of fully going to advance, it's going to keep going, right? It's a fundamentally inductive problem. But now that I've seen well over a decade of it, I would say I am pretty confident that it's going to continue, or at least I'm more confident than I've ever been at any time in the past, that it's going to continue to where the models are basically smarter than humans at almost everything. And I think there's a good chance that even happens in the next year or two. Again, seems far away, but this property of exponentials that they catch you by surprise. And if it's not a year or two, I think it's pretty likely that it's at least less than 5 years, within the 2020s. I think this moment will come in the 2020s. So kind of, I'll get into the economic.
That's the AGI.
Yeah, I'll get into the economic diffusion, which I think is complicated, but I don't want anyone to forget, that that as long as we have that fundamental technological gain, there's going to be many trillions of revenue, maybe many trillions per company in this area, because the economic potential is so great. Now, there's a separate thing, which is that we don't know how fast enterprises, companies, are actually going to be able to use this technology, right? The uses of this, what the technology is capable of today, is probably 10 times what the enterprise of the world are able to deploy. And I see it with our customers every day, where I'll talk to a CEO and they'll understand, and their executive team will understand the power of this technology, for automating customer service, for coding, for many other things. But they have a company of tens of thousands of people who are perfectly brilliant people, but experts in something that is not AI, and have to learn to use AI. And that, different names for it, change management, enterprise transformation, whatever it's called. The need to do this is very slow. It can take years. And so we have this powerful technology that I have an incredible amount of confidence will generate trillions in revenue, but we don't know exactly when. Plus or minus a few years, we don't know exactly when. And in the meantime, companies have to buy compute to serve all that revenue. And you don't want to buy too much because, you could financially overextend yourself. And you don't want to buy too little because then you can't serve all the revenue. And so that's where the kind of economic and financial risk comes from.
So, but you are involved in that, building data centers. You're spending vast fortunes. You've got the deals with NVIDIA. Do you worry that that's going to come back and bite you?
So we have some advantages in this. There's a stability to enterprise business that there is not to consumer, right? Consumer is very fickle. Enterprise purchasing, enterprise predictions are predictable. Also, enterprise tends to have better margins. The margin is basically how much buffer you have between buying too little and buying too much, between what you have to pay for and what you have to support in revenue. So we have a number of advantages here, but I won't deny that there is some inherent risk in all of the companies to this process. Whenever you have an upside whose amount is uncertain, or even whose timing is uncertain, and you have to make financial decisions somewhat blind to those things. You have to decide early to build out capital, to build out resources a few years in advance. There's going to be some inherent risk that's driven by that uncertainty. And I do think that some companies have probably overbought. I'm not able to look at their financials. I just know what they announce, and I'm like, whoa, I wouldn't necessarily have done that. I'm pretty happy with the decisions that we've made. But and I can't be sure about others, but it is entirely consistent that this could be the most transformative technology in the history of the world, that some companies will do really well, but not every company may.
Very quickly on that, as you said, you're on the enterprise side. On the consumer side, OpenAI with a big lead, there seems to be a lot of talk that Gemini is now catching up. Is that your impression as well?
I mean, we're not in that market, so I don't know about it.
I'm asking you as a dispassionate observer.
Yeah, the statistics would seem to suggest that. It would seem to suggest that, with their kind of greater distribution, with their greater existing reach, they've been able to make a lot of progress in kind of recent times. And again, this is why, consumer is fickle. This is why I would be careful if I were a consumer company in what was on my balance sheet.
Let's jump then to that big question, which we originally asked.
That was the Bloomberg editor-in-chief, John Micklethwaite, with the Anthropic CEO, Dario Amodei. If you're just tuning into the programme, welcome. This is Bloomberg Surveillance, and we've got to start with the price action. Equities down and down hard. We're off by 1.6% on the S&P 500. On the Nasdaq, big tech getting absolutely hammered so far this morning. If you turn to the bond market, Treasury yields on 10s. Never mind 420. Remember the first few weeks of the year? Really tight trading ranges. 10s can't get through 420. Now we're having a little sneak peek of life close to 430.
Yeah, and the real question for so many people is why. On one hand, you've got Japan, of course, creating a lot of volatility. On the other side, there is this whisper that it's a sell America kind of trade. We've been talking about that all morning. It even spurred Treasury Secretary Scott Bessent to come out and say that defies logic. So that is a scuttlebutt, even though we are seeing this across the world.
More on that in just a moment. Need to get you some single names, some morning movers. Let's cross over to Danny for more. Hey, Danny.
Hey, John. Yeah, a tough session for a lot of these names. I want to point out JP Morgan getting caught off in the sell-off, down 1.8%. Is this politics related? Because we did have the president of the United States on Saturday saying that he would be suing JP Morgan for what he claimed was debanking him after January 6th, and that political mess that came from that. JP Morgan for itself, they have said that we don't do that. We don't debank people for political reasons, and that's as far as they went to comment on it. But those shares down 1.7%. The president also expressed dismay that the Wall Street Journal reported that Jamie Dimon had been one of his Fed picks. Trump, of course, pushing back on that story. Elsewhere, you pointed out tech having a really bad day. I should point out all those memory chip stocks falling hard in today's session. Apple also getting caught up in the sell-off, down 1.2%, a downgrade from Citi, saying that it's because of the memory chip stocks, because they're so expensive. Apple's going to struggle with its margins, but it only downgrades it to $315, so that's still about a 25% gain from current share price. Finally, rounding things off with some deal news this morning, Wrap Therapeutics with a deal. GSK will be buying the company in a $2.2 billion deal. It values the company at about a 65% premium from the close. They make a lot of immunology and anti-inflammatory deals, so the price action just about getting to that premium. We're up 64% in today's session, John.
Hey, Danny, thank you. More from Danny in the next hour. Plenty of price action to kick off this Tuesday morning. Turning to the economy, companies adapting to rapid shifts in the labour market as AI integration becomes increasingly widespread. It's going to be a huge feature of the conversation here in Davos, Switzerland. And to add to that conversation, joining us now is Becky Frankiewicz, the President and Chief Strategy Officer at ManpowerGroup. Becky, good morning. Good to see you.
Nice to see you.
Let's get into this. Jobless growth is a big, big story, I think, for this World Economic Forum, and arguably the story the President's got to address himself when he speaks at this forum tomorrow. Can you describe the levels of growth we're seeing and whether we're seeing a decoupling in the level of job growth that we've seen in the last 12 months?
Yes, I think what we're seeing is the anticipation of AI. So that's the interesting thing. AI is still in its infancy. It's a baby, and we're starting to see it grow up, but it's not embedded in most companies still today. And so really what we're seeing is the anticipation of impact, and that's what's causing people to either delay, either increase, or not need to hire. And that's where we are right now.
So are you seeing companies try to increase flexibility by leaning into temporary workers just a little bit more?
Yeah, so you're the third person I've heard that from even today. And so it's a hot topic, but the data would say, no, we're not seeing that yet. I think what companies are saying now is we've probably postponed hiring as long as we can. We need to do something. And in this unknown of what AI is going to do, let's bring in workers that we have more flexibility with. And so we haven't seen the data show that yet, but that is definitely the conversation.
Who is getting hired to the extent that there are jobs being created? Is it people who are experienced and have already been in the workforce for a while, or is it younger people who actually are natives of the technology?
Yeah, it's varying by sector. And so in the tech space, we're seeing that the job description is requiring 5 years or more experience. Because there's been quite a slowdown in tech hiring. However, you go into healthcare, we're seeing a decline in the number of years of experience. And so we're starting to see a nuanced job market in a way that we haven't seen, at least since COVID.
How much do you expect a lot of the jobs that have been cut to never come back? That as a lot of these companies really understand the efficiencies more, really are in the early innings, we are having a structural shift in the labor market where many fewer workers are actually needed.
Yeah, so what we're seeing today is when a job is hired, about 20% of the time, it's like for like, which means 80% of the time, it's a nuance on the job. So we're already starting to see jobs be hired that aren't the same as the jobs they're replacing.
That's interesting, because last night I heard an executive say that firing will be very quick, but hiring will take years, and that's the bridge policymakers need to focus on. Would you agree with that assessment?
Yeah, and I think that, yes, I would. And it's the humanity in that space. And so we have this duality happening right now between the now and the next. How do I lead for the now and build for the next? And what's in between is our workforce. And how do we make sure our workforce has confidence that they can, of course, contribute today, but also be ready to contribute tomorrow?
A big feature of this Davos is the President of the United States. And he's been leaking out what he's going to talk about in terms of affordability. How does Washington, just in general, or even governments internationally, how do they address this issue?
Of affordability?
Of this crisis of potentially AI taking jobs.
Yeah, well, I think, again, 3 years ago at Davos, the talk was AI's coming for your job. Now the talk is AI's coming to your job. And that shift is an important one because it means now we know AI will take part of tasks. But the big unlock for AI is when we think about the outcome that we want and how you redesign the process. And again, the duality of humanity, we need workers today. They have to keep contributing, which is why John asked me the question about temporary labor and how do we keep flexibility, because we have to perform today towards an unknown future.
Some of these themes are already developing. We caught up with Citigroup earlier this hour, and Lisa asked him about what's happening with jobs. They're doing this quietly anyway. If you look at the overall staff levels at some of these banks over the last several years, they've barely increased. Profits have absolutely exploded. Bramo, I would suggest if you look at the banks on Wall Street, some of these things are already happening.
They have actually contracted their staff at the fastest pace, going back to even some of the depths of the financial crisis, but it's coming without that commensurate slowdown. Exactly to your point, jobless growth.
Becky, what is making them more productive? Where is it coming from?
Well, we're just squeezing more for less is what we're doing today. Again, waiting to see what AI can come automate. But when we ask companies if they're going to hire or not going to hire, AI is only 20% impact on those answers. And so it really is, how do we keep control of our workforces while we're anticipating something in the future?
Earlier this hour, I mentioned a PwC survey. I'm going to mention it again because I think it's absolutely amazing. on a weekend and the start of a week where all the news flow will be dominated by tariffs and geopolitical risk, you survey CEOs in America, survey CEOs worldwide, and ask them what is the region they're most excited about, and it's America.
Yes.
And it's up on last year. It's actually up on last year. It's gone from 30% to 35%. What is so hot about America right now?
Yeah, so one is the adoption of AI. I mean, the American population is one that says, give it to me, I'll try it, versus are we sure it's going to work with skepticism? And so part of it is the entire culture of the country is built on adoption, and that translates into the workforce. That is one. Two, there is this drive for growth that's part of the American spirit that I think you're seeing show up. And so some of it is I'd say, soft, but the labor market and growth is full of feelings, John. It's one of the things we've learned. We thought it was data. It's actually not. It's how I feel. And fortunately, people are confident in America today.
How do you feel, Becky? Feeling confident?
I'm cautiously optimistic is what I would say. I'm cautiously
Diplomatic.
optimistic. Yes, cautiously optimistic.
Becky, it's good to see you.
Thank you.
Thanks for being here. Thank you. Becky Frankiewicz there, the ManpowerGroup president. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Back with us. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Japanese Prime Minister Sanae Takaichi's election pitch to pause taxes on food, sending bond yields soaring to records. The rate on the 40-year surging past 4%. That's the highest since its 2007 debut. Continued volatility expected in Tokyo trading ahead of the snap election February 8th. President Donald Trump inviting world leaders to become members of his Gaza Board of Peace. Invitees include the leaders of Russia, Turkey, Argentina, and Canada. According to a draft charter seen by Bloomberg, the Trump administration is asking countries that want a permanent spot to contribute at least $1 billion. French President Emmanuel Macron declining to join the board. Fed Chair Jay Powell will attend Fed Governor Lisa Cook's SCOTUS hearing. Sources telling us here at Bloomberg, Powell plans to sit in on Wednesday's session in the case of President Trump's attempted firing of Cook. Fed watchers and analysts say the case will impact the president's ability to fire Fed governors and influence the central bank. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie in the next hour. Up next on the programme, financing the AI boom.
We are safely and soundly deregulating the banking and financial system. According to Oliver Wyman, we may have added $2.5 trillion in lending capacity, which will help finance our AI boom.
We're live at the World Economic Forum in Davos, Switzerland, waking up to a sell-off in the equity market. Check it out. Futures selling off over the last 24, 48 hours continues so far this morning. We're down by 1.6 on the S&P. On the Nasdaq, we're down by close to 2%. With a strong whiff of tariffs hanging in the Swiss air, this is the move you've got in the bond market. I have to say up front, the move in the bond market is global. The bigger move is actually in Japan, but it's dragging yields higher stateside as well. We're up by 7 basis points on 10s, up by close to 10 on 30s. With that move in the bond market, this might be of concern. You're not seeing dollar strength. You're seeing dollar weakness. Check it out in foreign exchange. Euro dollar right now, positive on the session. The dollar, Lisa, weaker against everything in G10.
Which is the reason why people are saying that the sell-off in U.S. assets is something more than simply an issue having to do with Japan. Whether it continues, whether it persists, remains to be seen. A lot of people drawing parallels to April with Liberation Day.
A strong echo, I think, of what happened last April. Remember what happened next? Market ripped, everything was okay. Things are fantastic. Why one sector, tech? Insulated by the warm embrace of just significant tech spending over the last 12 months.
Yeah, this to me is the story of the United States and the optimism that you're hearing from so many business leaders here in Davos. Yes, people are concerned about the geopolitics. Yes, they're not sure where things are going to go. But yes, they're so excited about artificial intelligence. They think that that will supersede absolutely everything and keep demand underpinning some of those flows into the U.S.
It's a big story at the World Economic Forum. Under surveillance this morning, financing the AI boom.
We are safely and soundly deregulating the banking and financial system. According to Oliver Wyman, we may have added $2.5 trillion in lending capacity, which will help finance our AI boom. We are cutting back regulation, and that is leading to great certainty for businesses.
That was the Treasury Secretary Scott Bessent speaking a little bit earlier. Joining us now to extend the conversation, Michael Kratsios, the Director of the White House Office of Science and Technology Policy. Michael, good morning. Good to see you.
Good to see you guys.
Thanks for being here. We've got a lot to talk about. Let's start with this. The energy intensity of GDP growth feels like it's changing really, really quickly. How do we need to adapt to that?
I think energy is a key driver of everything that we're going to be doing to drive this AI race. The White House put out its AI action plan in July of last year. It has 3 pillars. One is innovation, one is energy, and one is international. So a key pillar of the whole thing to work out is how we can get enough energy in the U.S. built out and how we can build these data centers quick enough to power all the great solutions that are going to come to our industries in the years ahead.
You're tracking the numbers, looking at the charts. When you look at demand and supply, are constraints on the horizon, or are they avoidable?
We generally feel like the industry is finding a way to push through it. Obviously, the regulatory challenges associated with being able to permit and build this stuff is in everyone's mind. And I think you saw the president speak directly to this issue on a Truth Social post last Monday, where he said, look, if you want to build out all these data centers to these data hyperscalers, you have to find a way to make sure that the energy prices for American consumers don't go up. So the White House and president are very cognizant of the electricity issues, but we think we can meet that demand.
A lot of people say that the United States is certainly ahead when it comes to chip technology, when it comes to some of these hyperscalers. Mm-hmm. China's ahead when it comes to how much energy it has available to use some of these solutions. How long do you think it would take for the U.S. to really catch up to where China is on the energy space?
You know, I don't necessarily see it as us trying to catch up with the energy capacity of China, but I think it's more, do we have the amount of energy that we need to meet the demand in the U.S.? And up to now, I think we're able to kind of meet that demand and that capacity, and I think we're in a good place.
So you don't think that there's any additional energy that needs to be provided in order to meet the build-out that people expect coming down the
obviously, we could always build more electricity and drive more. That's the whole agenda is around energy abundance, but I think we're pacing it and creating the right regulatory structure to meet the ultimate demand.
Michael, there's a bill that hasn't even gotten out of committee that's getting a lot of attention when it comes to Congressman Brian Mast's bill, basically saying the U.S. needs to regulate, Congress needs to regulate chips the same way they do arms sales. Who should be regulating chip sales to, say, adversaries like China?
I don't have any position on that bill. I haven't read it, but I will say currently Secretary Lutnick and the team at BIS is obviously on the hook by statute to work through our export control policies.
When it comes to China, though, there has been a divide, I would say, within the White House, or a robust debate, let's call it, about how do you deal with China? Do you sell them the chips to get the world addicted to American technology, or do you need to put stricter guardrails around it?
Yeah, the policy right now is to restrict the top-end chips from access by the PRC. So currently the Blackwells, which are the best chips on the market, are not available to China. The Rubin that's going to come out later this year is also going to be export controlled. The change that many of you saw this week was a new rule that went out for the H200, which is one chip below the Blackwell. And those sales are allowed to China with some restrictions.
Can we cut through narrative and facts? I'll describe the narrative of the last 12 months. It was around this week last year and the week after, there was a near obsession with DeepSeek. And the story coming out of that was that somehow China was far more efficient at developing these things compared to the US, and that it was also export compliant. And it was the export compliant piece of this that got my interest. As far as you're aware, are the developments you're seeing out of China export compliant, or are they just getting these chips somehow, somewhere into the country?
Yeah, I think we've come a long way since that moment with DeepSeek, and I think what's shown over the last year is continued American dominance in leading frontier models, and it's something that I think all of our big AI companies are very proud of. The message that we came to bring here to Davos is all about the third pillar of the AI action plan, and that is how do we share America's technology, our AI stack with the world. We want everyone to be building on American chips, fine-tuning on American models, and using American applications. And that's something that the president developed an executive order in July of last year, and we'll full steam ahead to make sure that anyone who wants to build on AI has access to our technology.
On the flip side, there's a real question, and certainly we're here in Europe, so in Europe they're thinking about regulating, because that's what happens here, about regulating and overseeing some of the AI that's coming out, particularly when it comes to sexualized images tied to Grok in particular. How much is that on your radar screen? How much can you regulate while also allowing innovation to really gain steam?
We think about that and take that issue very seriously. I'm a new father myself, and I think about that issue every day when I work through this policy debate. The president signed the Take It Down Act, which was supported by the First Lady last year, and it shows the seriousness, the bipartisan seriousness that we take these child imagery issues. And I think for us, I think it's something that we're going to continue to track and make sure that we're protecting all of America's youth.
Do you know what the ultimate goal is, other than just to win? I mean, people are talking about agentic AI, but they're also talking about the sort of supreme intelligence that will render us completely obsolete. I mean, does it matter to you? Is that something that the White House thinks about?
To me, the way I think about winning the AI race is about adoption. And that's the biggest thing. You can have all these leaderboards, DeepSeek maybe somewhere on there, you have all of our great models somewhere on there, but who's at the top of the leaderboard doesn't necessarily mean that you've won. If no one is using that model, it doesn't really matter. So for us, we spend a lot of time thinking about how can you accelerate the adoption of these American models, not only in the US, but around the world. That is why that third pillar of our export strategy is so key.
When you look at a map around the world, you planning on data centers in Greenland?
I'll leave that to other people to think about.
Making us obsolete?
Well, I mean,
listen,
if you read some of the real,
is that what you're trying to do, Michael? Make us obsolete? Hey?
I don't know about obsolete. I think it's going to be a technology that's going to really help the American people.
Less relevant?
I mean, well, it's kind of what people say. I mean, if you listen to some of the, people who are raised on science fiction who clearly are creating some of this technology, there is a flavor of that underpinning some of it.
You sound impassioned about this. We got a week of this?
Listen, you've got a whole lifetime of this.
I know. Maybe.
Welcome.
Michael, it's good to see you.
Thanks you, guys.
Thank you very much. The White House Science and Technology Policy Director, Michael Kratsios, there on the opportunities in the AI space and some of the fears out there as well. Coming up on the programme, next, General Atlantic Chairman Martín Escobari, the former House Speaker Paul Ryan, Lumen Technologies CEO Kate Johnson, and the former IMF First Deputy Managing Director Gita Gopinath. Gita's going to join us very, very shortly. We kick off our coverage here in Davos, Switzerland, at the World Economic Forum with this price action developing right here. Equity futures selling off. On the S&P 500, down by more than 1%. On the Nasdaq, down by 2 percentage points. A sell-off in the bond market, yields are higher, and a much weaker dollar. We'll see if this sticks, but it's a main story for us this morning in financial markets worldwide. From Davos, Switzerland, you're watching Bloomberg Surveillance.
Growth has been resilient.
I'm not excessively concerned about inflation right now.
Most of those inflationary pressures are not as prevalent.
There's lots of challenges. There's a variety of left tail items that have certainly grown in stature.
Ultimately, the U.S. is the most dynamic economy, and ultimately that's where you want to be invested.
Bloomberg Surveillance, live from Davos, with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from Davos, Switzerland this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. And the main event is about 24 hours away. The President of the United States addressing the World Economic Forum. The Europeans are very much on edge. The bank CEOs are as well. There's a different tone coming into this Davos, Lisa, compared to 12 months ago.
There is a sense of unease, and at the same time, that optimism still prevails, that there is going to be growth. And frankly, business leaders do not want to talk about Greenland. We just experimented with that, and the experiment went as expected. Honestly, there seems to be a feeling that there is a bifurcation between what's happening in the business world, growth, deals, let's get business done, and what's happening in the geopolitical realm, which is we are seeing a new world order take place. How these come together remains to be seen.
Don't you get the sense that business officials kind of welcome this development here in Davos, Switzerland, that we can stop pretending and just focus on business and nothing else?
This is the world's biggest networking event. This is like speed dating for clients and their different businesses. And ultimately, there is a feeling that there is no edifice. It isn't sort of covered in this patina of self-righteousness. It is about getting deals done. And that really is the transactionality of Davos that has come very much to the fore.
European officials would like to make some deals as well, I'm sure, on tariffs and on Greenland. They are very much on the back foot coming into this. The president is being very transparent about what they're communicating with him. He's leaking their texts in real time. This is actually happening day to day into today.
Absolutely. I don't understand what you're doing with Greenland, said Emmanuel Macron, according to the text message he sent to the president. And the French said, yeah, that is true. And then he subsequently invited him to have dinner with him in Paris on Thursday. NATO Secretary General, the same thing. Mark Rutte, text message released. So the president is coming here with some in Davos would call an immense distraction from some of the work that's already been done. These governments have already struck a trade deal with this administration. Do they need to redo that all over again? And I need to remind everyone, we still have a Supreme Court decision coming out of the United States, potentially 10 a.m. New York time today, that might strike down those IEEPA tariffs.
It sparked a sell-off in this equity market. Check it out. Stocks are down, bonds are down, yields are up, the dollar's weaker. There's a real Sal America trade developing worldwide. You'll notice this, though. It's not just about the US. I want to keep going back to this. Japan. Japanese yields are higher by 20 to 30 basis points at the long end of the curve. That is something you cannot ignore. That's a major move coming out of Tokyo.
Right now, you cannot underestimate how much Japan, the ballast of the entire world bond market, is inserting volatility that we have not seen for decades, if ever. Suddenly, this area where all of these investors in Japan needed to go to the places like the United States for yield are seeing almost 4% yields on 30-year JGBs. So a real question here about how much that's reshaping the landscape for income-producing products and part of what's going on in the U.S.
Just to take a step back and look at the global bond market, for much of our careers, for many of you at home on trading desks worldwide, Japan has been an anchor around the global bond market and yields forever, for decades. That's been released. That's long gone. What does this mean now for all the deals we'll talk about this week that need to be financed? All the proposals you might hear from the president that need to be supported? How much crowding out are we about to see if Japan starts talking about cutting interest rates, cutting taxes rather, and pushing the fiscal pedal?
It's a great point. We have easy financing conditions because of just this swath of liquidity around the world. How much is Japan a part of that story, and how much is this a sign of things to come? Because right now, the populist policies that are driving the snap election that Sanai Takaichi is going to have is something that is global, not just a Japanese phenomenon.
Packed agenda this hour. We'll be catching up with the General Atlantic's co-president, Martín Escobari, as equities continue to pull back this morning. We'll speak to the former House Speaker and Teneo Vice Chair Paul Ryan, and we'll catch up with the former IMF First Deputy Managing Director, Gita Gopinath, a little bit later this hour. We begin this hour with stocks tumbling. General Atlantic co-president Martín Escobari joins us now for more. Martín, good to see you, sir.
Great to be here. Thank you for having me.
Fantastic to catch up with you. Something that Apollo and my friend Jim Zauter often tells me is that public markets shape the narrative, private markets power the economy. Let's talk about private markets and the opportunities that you see now relative to 10 years ago, 15, 20 years ago. In tech, they were asset light. They were the great disruptors. You were early investors in things like Uber, Airbnb. Has that changed now, 10, 15, 20 years later?
The great tsunami that has lifted all boats of growth equity is digital transition. More of the world, more of the companies are moving to a digital world. That trend that's 25 years in the making, turbocharged by AI. AI is having real life impact, getting companies online, getting people to transact online, getting smart decisions being done digitally. So that's the wave of today. Growth equity also is benefiting in the fact that we've had 3 years without exits. A lot of stress in the system, a lot of weaker GPs under a lot of pressure to post DPI, putting some of their best assets on sale. The combination of these two trends, digital acceleration, prices on sale, 2025 was one of our strongest cohorts.
Let's sit on digital transformation and then we can get to exits in a moment. To scale revenue before, you didn't have to make massive outlays into assets. The capex over the last 12 months has been through the roof. To scale revenue now, do you have to invest a lot more in the physical world?
Depends on your business model. We do asset light. Most of the things we do are relatively capital efficient. What has been asset heavy is the development of these large language models and the investments in capex for AI, $1.5 trillion. What's interesting with AI, and our approach to it has been to be careful, is that the first killer use cases are finally developing. AI for code gen is a $50 billion revenue business that was almost zero 2.5 years away. Anthropic is the leader in that market, about 60% market share. Those revenues growing exponentially. And the good thing about exponentially, it starts like this, but eventually goes like this. The next wave of AI adoption will be, we think, automating workflows of people like us in sort of Microsoft Word, Microsoft PowerPoint, Excel being automated, and that's going to be 20 times bigger. So we're in an inflection point for AI, and it's very exciting to watch.
So this is the existential threat that I was talking about. See?
Get into it, Lisa.
I mean,
You
come
can
on.
lean in.
I mean,
By all
we don't
means,
have
lean
to.
in.
Look, this is a question, though. Can you have asset-light models the way that you used to? Or to John's point, are we seeing asset-heavy industry just by virtue of what is necessary to really build out AI?
It's hard to compete in the large language model world asset-light. But you don't need to compete in that world. You can be a user. Our portfolios are using these large models to drive efficiency. Our portfolio on the software side to drive revenue. New businesses are being created with this technology. So I think the manufacturing of AI, the raw compute, capital intensive, using an AI application is asset light. That's where we're investing.
So you want to talk about exits. Let's talk about exits. It has been a real desert for monetizing some of the private equity investments. How much do you expect that to change over the next 6 to 12 months, and what gives you confidence?
We've come out of the winter of exits. 3 years without exits have been really, really tough on the industry. But the rumors of the death of the private equity industry have been exaggerated. 2025 was already the second highest exit year for our industry. $1.3 trillion were returned to our LPs. That's 80% of the peak of 2021. Our bet is this year we'll surpass 2021. IPO markets are back, M&A markets are back, LPs are getting liquidity back. The wheel of private equity is turning again, and it couldn't come at a better time.
Let's talk about the global backdrop. A lot of enthusiasm for America in the last 12 months. We've spoken to many executives about that. They've maintained that optimism. Are you looking elsewhere?
We're the most global of the large private equity shops. For the last 10 years, our globality has been expensive, because nothing beat America. The case for global diversification has never been stronger. You look at America today, 23 times earnings, the market as a whole. Europe, 50% discount. Emerging markets, 70% discount. Fiscal house in order, currencies appreciating. For the first time in our 45-year history, we have more assets outside the United States than we do in the U.S. We love the U.S. It's just a little pricey. Let's buy the rest of the world.
Martín, PIMCO said that they're diversifying away as well from U.S. assets. They want to take this multi-year approach because what they call this administration being quite unpredictable. Is that why you are looking for this diversification?
The world has never been this unpredictable from a policy perspective. What's the one antidote to this level of unpredictability? The only free lunch in finance, diversification. So yes, diversification is a natural reaction to policy uncertainty.
Diplomatic finish to the conversation, Martín. Good to see you.
Great to see you.
Thanks for dropping by. Thank you, sir. Martín Escobari there of General Atlantic. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Thank you. Top Iranian officials have called for leniency for some protesters arrested during the latest wave of unrest. Human rights groups say around 3,500 people have been killed in the response to protests over worsening living conditions. European Commission President Ursula von der Leyen calling President Trump's threat to impose more tariffs over Greenland support a mistake. In a speech in Davos, von der Leyen said, quote, "A deal is a deal," and his threats to the EU violate their trade deal. Netflix reaching an adjusted all-cash deal to buy Warner Brothers Discovery. The new terms are meant to expedite a sale as Netflix battles Paramount Skydance for the company. Warner Brothers is expected to hold a special meeting of shareholders to approve the new Netflix deal. And that's your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Let's head back over to Bloomberg House, where Bloomberg's Emily Chang is sitting down with the Signal Foundation President Meredith Whittaker. Let's take a listen.
Wrapping the models in hardware and software to really recognize how reckless it would be to sort of deploy these things in ways that undermine privacy and security of things like Signal. And so this is why we're talking about it. There are ways to do it better. I think Anthropic is, again, a very good actor here. But the stakes, when you're talking about the operating system, couldn't be higher because this is...
And even before we get to agents, you've got, so many of us are dumping our deepest and darkest secrets into ChatGPT and Gemini and Claude, and then we're becoming increasingly comfortable doing so. I'm curious, what are your AI habits? Like, what do you use? What do you avoid?
Occasionally I'll use ChatGPT or Perplexity for research, but I always check my sources, right? Like, these are not inherently accurate. I don't write with AI. Like, writing is a process of real, intellectual interrogation for me if it's serious. I do scholarship, I do academic work, so I like to sit there with that sort of, Nietzschean discomfort with ideas until I understand something, and then, I really understand it. You can like pull a string and I will know what I think because I've had to struggle with it. And I think that's actually when I think about AI in education, when I think about what education is in terms of training the human to engage with complex realities and actually synthesize that and come up with conclusions that are responsible and clear and intellectually stimulating, like we cannot lose that capacity. I think, I use it, we have coding agents that people use, but they are responsible for their commit. If that commit is insecure, if that code doesn't work, they're responsible for it. It's their fault. I don't really care what they used. And they had better be able to maintain that code base. And this is an issue we don't always talk about, right? If you're spitting out a bunch of code, but you don't understand it, it's going into your repo, you're pushing that to production. 2 years later, there's a vulnerability, there's something, and you don't understand that. That's a huge issue because software is living, right? It's in relationship to a complex set of dependencies, to the platforms it runs on, to the tooling it uses, all of which are changing constantly, which means that even software that has integrity one time may actually grow out of integrity because in relationship to another part of the system, it no longer works. And so, this is why you can't just sort of ship something and have it work forever. We have to pay teams of engineers to attend to this constantly, like a living creature. And so I think there's these sort of things that are just the reality if you work in tech that get abstracted away in the promise of sort of, seamless ease and autonomy that is often part of the marketing hype around AI.
You left Google in 2019 after leading protests around AI, around military contracts. What do you think of the tech industry's pendulum swing under the Trump administration?
I want to characterize that a bit more specifically. I think, ultimately, I'm a student of history. And centralized surveillance power, centralized control is never that healthy. And my concern was that you had companies that had so much incredibly intimate information about global populations that were also going to be aligned with one or another nation state's military. And it was me and thousands of people, right? Because structurally, that is something that is not healthy. And I'll just put that out there. Again, I get to be honest, I know, talking. But we can look back through history. This is what is unprecedented now here is the amount of information, the seamlessness of that information, and the ability to sort of mine and use that information. And we know that state control or centralized control, authoritarian control is largely constituted via information asymmetries like that. The ability to repress and fracture social and economic bonds by weaponizing your most intimate information. What would you not do in order to prevent every single text message you've ever written to everyone being put in a database and sent to everyone you know, your in-laws, your church?
Equity selling off across the board so far this morning. Check it out on the S&P 500, down around 1.5%. On the Nasdaq, through much of the session so far, down around 2%. Slowly peeling off the lows. Check out the bond market. Switch up the board. Yields up across the curve, particularly at the long end. 10s and 30s being dragged higher by also what's developing over in Japan, and we can talk about that a little bit later on. But it's this move here. Just compare the move in foreign exchange to the move in the bond market. Typically, yields up traditionally would mean a stronger currency. Over the last year, when we've had these kind of bouts of risk aversion, we saw it really concentrated last April. We've seen a dollar that's weaker and a bond market that sells off, and then you start to wake up to headlines about the South America trade making a comeback.
Especially when paired with gold absolutely surging, and you see all of the precious metals really doing very well. At the same time, there is a question of how sustainable this is ultimately going to be, and the question that you were making earlier, the point you were making, at what point does the bond market force the hand of policymakers, act as a check on some of what's coming out of the White House?
Some people argued last year in April, following those Liberation Day tariffs, that if you were looking for guardrails for the president, for this administration, for the Treasury Secretary, the North Star was the bond market.
Absolutely. I was on Air Force One with the president right before he reversed course and really kind of unleashed on me when I asked him, does the Trump put even exist anymore? He said sometimes The economy needs medicine. That was tariffs. But at the end of the day, the bond market got too yippy for him, and he decided these are not rules of the road. These are engagements. These are negotiations. So now is he coming in with this fresh tariff deja vu of April 2nd? The Treasury Secretary says it's hysteria. Everyone take a breath. Take a step back. Maybe it's time for new negotiations.
The President of the United States addressing the World Economic Forum tomorrow. Full coverage right here on Bloomberg Surveillance. Under surveillance this morning, the trade war making a comeback.
I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can't protect it. NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
That was the President of the United States. Joining us now in Davos, Switzerland, Paul Ryan, the former House Speaker, and now Teneo, Vice Chair. Speaker Ryan, good morning. Good to see you.
Good morning. Nice to see you.
I had this question planned for a while. Does your party now have more in common with Senator Bernie Sanders than the 114th and 115th Congress that you oversaw?
Apparently in economics, maybe the case is right. On tariffs and on interest rate caps and things like that, perhaps. I'm a conservative. This is not conservative economics.
Is there space for that in your party now?
Yeah, there is. Our party is a Big Ten party. It's got a lot of different factions. The dominant faction right now is more of an economic populist faction. That's the president's faction. That's MAGA. I'm a conservative, and I'm in the minority of my own party, but that happens.
When John's talking about having this relationship, say, the MAGA wing with Bernie Sanders, we're seeing that with a ton of issues the president's talking about, that the defense sector shouldn't have dividends or buybacks, credit card interest rate caps. Bernie Sanders literally wrote the bill. How do individuals in the minority of the Republican Party right now make their voices heard?
This is populism, but it's populism tethered to whatever people think is popular, not tethered to certain core principles like liberty, freedom, free enterprise, private property rights, et cetera, et cetera. So my wing of the party, which is the classical liberal conservative wing, the free market wing of the party, is in the minority. And we just had to make our case for why we believe what we believe and why we think people are better off at the end of the day. The challenge is it's hard to defeat populism and sound bites and emotion. And that's what can win the day. But it doesn't win the issue. It doesn't actually deliver the results. So at the end of the day, I think results are what matter. And I think people, voters, vote for results. If they're going to vote for populism that speaks to their concerns and their grievances and their frustrations, that's one thing. But if that populism doesn't deliver policies that actually solve problems, then they're going to look elsewhere, and hopefully we can have a better discussion about what actually works, what principles that built our country, that make our economy strong. It's our private property rights, our deep liquid capital markets, our rule of law. That's why America is America. That's why we've done so well. And we have to defend those principles, even if those principles aren't that popular.
You're a free market individual. This administration is taking equity stakes in companies. Is that state capitalism the way that Chinese do it, or say like the Europeans in the 70s?
Yeah, it's more Europeans. It's more Japanese. It's more Europeans. It's not Chinese. It's not what conservatives are for. We don't believe in doing that. But this is more industrial policy, less communist dictatorship. It's very different.
Your role right now is to advise companies, and you're coming at a time where companies have no clue what's going on at the White House or what might come out of it. What do you tell them?
Yeah, I mean, we just did a survey, actually, of 750 CEOs that Teneo just did. And frankly, a lot of them are pretty optimistic about M&A. They're optimistic about economic growth. Where they're uncertain is tariffs. So they have to plan for resiliency. They're basically building resilient systems because they don't know what's going to happen on tariffs. I actually think, and I hope, that the Supreme Court may take away the IEEPA authority. I don't think that law was written for tariffs. It's a sanctions law. We'll find out. It may be even later today. I don't know when the court's going to rule. But that's a tool the president's been using far beyond Congress's intent. That's my opinion. But if that happens, then he'll have to go to other trade laws that aren't as easy to use, like the IEEPA laws have been used. And so that takes away some uncertainty. But we're going to have trade uncertainty, tariff uncertainty. But there's good regulatory posture. We have good tax policy. There's going to be a lot of M&A. So I think we're driving the car with 2 feet. We got 1 foot on the gas, 1 foot on the brake. And that's what CEOs are trying to plan for. How do they respond? How do they seize the opportunities and plan for the uncertainties?
We just had the head of General Atlantic on, who said that resilience to him means diversifying, and it means diversifying away from the United States. This is the what-if scenario. In the meantime, businesses have to plan. How much are the people you're talking to moving capital flows outside of the U.S. in a way that concerns you?
I worry about that. I worry more, frankly, about a long-term debt posture and the fact that we're not doing anything to deal with our debt, which means our dollar. So I think there are things that are good that are happening, say, the stable coins being deployed. That's good for the dollar. If we got our fiscal house in order, that'd be great for the dollar, but I don't see the populist politics lending itself to doing those things. But we do have the best economy in the world. We have the deepest and most liquid capital markets. So I still think we're going to be there. We have better regulations than what we had in the last administration. We have good tax policy, but there's a lot of uncertainty. So, yeah, it bothers me when I hear companies feel they need to diversify away from America because of the uncertainty. But if we get this uncertainty dealt with, if the uncertainty tamps down, then I think we'll be back in business. So overall, I think we're going to be okay at the end of the day. I think our institutions stick.
Can we finish on the debt market? You took us there. There's a sell-off in today's session. Look, 4.30 on a 10-year bond yield is not a crisis. I'm not going to pretend it is. But the direction of travel is just to push more and push more. And it's not just America anymore. That's right. Maybe Japan is leaning in the same direction and they'll loosen things up as well. What do you think we're building up to?
What I worry about are auction failures. They won't technically be a failure because they'll make the primary dealers buy the paper. But I worry if we see that an auction would have failed, that what the spike in yields will look like, and then what that does to our fiscal policy. So if we could get ahead of our fiscal policy problems by reforming our entitlement programs prospectively for the X generation on down, I think we could calm the bond markets down and we could be the flight to quality again. We're not there and our politics aren't there yet. So because that's not anywhere near being politically viable, you have these kinds of things. Then you have all this tariff uncertainty, all the things that are happening there that are going to spook the markets. I don't know if this is a Japan story today or if this is a Denmark. I don't know what this is about. But if we had our fiscal house in order, I don't think you'd see these kinds of shocks.
There's no flight to quality this morning, that's for sure. Speaker Ryan, it's good to see you.
Good to see you.
Thanks for dropping by. Thank you. That was the former House Speaker and current Teneo Vice Chair, Paul Ryan. Weighing in on the debt market at the end, Lisa. Look, yields are up. It's not a crisis at 4.30. That's not a problem. Let's not pretend it is. But the direction of travel, we shouldn't pretend it's a good one either.
Yeah, and if I were going to be reincarnated as anything, it would be the bond market, right? Is that, in the words of a sage, given that a lot of people are worried that it could get out of control and actually shape policy itself.
Coming up next on the programme, we'll catch up with the Lumen Technologies President and CEO, Kate Johnson. Live from Davos, Switzerland, at the World Economic Forum. It's day one for the team here at Bloomberg Surveillance. Good morning to you all. Day one for your stateside as well after a long weekend. Check this out. Waking up to this in the equity market. Down and down hard on the S&P, the Nasdaq, the Russell. On the Nasdaq 100 so far this session, we're down by close to 2%. Things are slowly getting better on the S&P 500, sub 1.4%. In the bond market, bond yields higher, particularly at the long end of the curve, 10s and 30s. The two-year bond yield quite anchored right now. You're seeing yields bleed higher by something like 5-6 basis points on 10s. The move much, much bigger in Japan. But as we keep going back to this story, it's the move in the bond market accompanied with the move in foreign exchange that gets your attention. And it's a similar story. We've seen this movie before. We saw it almost 10 months ago, last April, when we saw that dollar weakness together with bonds selling off, that sell America trade, just making a little bit of a comeback. I've got no idea if it sticks, but that's certainly what we're seeing so far this morning.
And you're also seeing a similar kind of flavor when you look at the precious metals. I will note that as U.S. hours begin and people come into their offices, the move is tempering. And I think that that's interesting because that typically is a trend that we see. People come in, they're buying the dip. So the day is young, but that is something to keep watching.
Well, the president did send out his soother-in-chief to the markets, he calls it, Scott Bessent, who said, this is hysteria of April 2nd. And what did we learn on April 2nd? It was a negotiating tactic, and Trump ended up having negotiations and deals and wasn't the high tariff rates that he first promised.
Just for the record, are you suggesting the Europeans are a little bit more emotional about this issue? Just for the record.
Actually, well, they are if you look at the text
100%.
messages.
When you take a look at the text messages, and frankly, in private conversations that you have here, it is deeply emotional, and it is deeply emotional for fund managers as well. So I will just stay on the record, yes.
We'll see if this dip gets bought a little bit later in the session as we count you down to the opening bell. Let's cross over to Danny Berger for your morning movers. Hey, Danny.
Hey, John. Some earnings to get through this morning. 3M selling off hard after reporting down 4.6%. I got to say, their earnings were fine. They beat on most metrics. They also said that they're going to grow both sales and profitability. The one sore spot was their consumer business. That continues to decline and has had a couple consecutive quarters of that. Maybe it's also just getting caught up in the broader sell-off. So 3M, again, down 4.6%. Rallying this morning, and again, maybe this is another head-scratcher, is D.R. Horton, because their earnings did miss the home builder. Less sales than expected. Even though mortgage rates came down, the CEO on their earnings call did say that it's this issue of affordability that is still keeping home buyers on the sidelines. So shares initially sold off, and now they're up. Those shares up 2.9% in the pre-market. This one is very clear why it is moving. It is Critical Metals. This is a company whose main flagship mining project is in Greenland. This is a company that tends to rally whenever there are more nerves about Greenland, whenever the conversation gets more real about the president's ambitions to have the country. So those shares up 9.5% with President Trump trying to make moves there at Davos around Greenland, John.
Danny, thank you. More from Danny in about 60 minutes' time. Let's turn back to tech. AI driving significant data movement, boosting partnerships between hyperscalers and energy providers. Kate Johnson, the president and CEO of Lumen Technologies, a telecommunications company that provides high-capacity fiber networks, joins us now for more. Kate, good morning. Good to see you.
Good morning. How are you?
Thanks for dropping by. I'm fantastic. Let's talk about your company. What are we transitioning from to? Are we no longer just a telcos company? What are we developing into?
We're going from legacy telecom, which is point-to-point analog solutions to move data, to a digital network services company that provides AI-ready solutions. So the big problem is huge swath of data needs to go everywhere. Compute and storage spread everywhere. Users spread everywhere. You got to get the data to and from the models and to and from the people to drive insight. And you need fiber connectivity to do that. And that's what we do.
That's what you do right now. How have you had to change and adapt the business to meet this moment?
Massive transformation across a couple of different levels. The first is expansion at the physical level, and that's what you've seen in the papers. We're doing deals with hyperscalers to interconnect clouds and data centers. Largest expansion of the internet at large in history. The second piece of it is digitizing everything. You know, when cloud came around, it digitized compute and network and storage. And nobody touched network. It kind of just stayed static. And what we're doing is we're programmatizing or making the network programmable, just like compute and storage are, so that you can be agile as an enterprise using AI. Fire up my network, fire down my network, depending on how much data I have.
It's cost intensive to do this, and you work with a number of different partners. There have been some high-profile partnerships, including the latest being Palantir. Mm-hmm. What are you looking for when deciding who you want to partner with?
So basically, any technology company runs on compute, storage, and network. So we work with all of them. And what we do is we tailor our network solutions to be sold right with that technology cloud solution so that enterprises no longer have to go to two separate places. They can buy whatever solution they're looking to transform and drive business outcomes, and they can get an AI-ready network embedded in it. And that's how Lumen's providing value to the technology ecosystem.
How do you keep staying power? Because this is a very quickly evolving technology, and some people are worried that things like neoclouds or some of these other developments are sort of glorified real estate plays or, are potentially going to be stranded assets when the technology changes or there's less need for that level of compute. How do you avoid getting left with that kind of excess capacity?
The really cool thing about networking is it's relevant to both sides of the construction of the AI economy, the production side and the consumption side. So the production side is all the CapEx you're hearing about, people building, the technology companies building infrastructure to supply AI solutions. They're connecting all these data centers to do their models and start training them, right? But there's the consumption side. That's digital, right? And that's the digital platform that we're building to make it easy to consume. So we're relevant to the production side because we connect the data centers. We're also relevant to the diffusion side of AI because we help enterprises take advantage of those models. So our staying power is quite impressive, actually.
As you make this transition, are your hiring decisions different? Do you have to sacrifice also anything?
So it's a great question. The transformation of our workforce is going to be pretty significant, just like every other company on Earth. We're importing AI skills. We're training and upskilling our existing workforce. And we're also trying to figure out how to shapeshift, how to invest in places where we haven't in the past.
Do you think this is a global story for telecoms?
So I think it's a story for telecom in two parts. One is most telecoms are still focused on analog provisioning of services. They're stuck in the old physical network, and they're not investing in the digital platform. Any telco that recognizes that crown jewel asset of the fiber network and builds a digital platform on top of it is relevant to this story.
In capex booms, mistakes are made. Can we talk about how quickly this is moving? We've seen some estimates that in the last 12 months in the US, 40% of the GDP growth has come from tech capex. It was mid-single digits only a few years ago. Things have changed that quickly. How do you approach something moving that fast and maintain discipline?
Look, if you're asking me if there's an AI bubble, I think
I'm not there yet. That's the next one.
Okay, well, so
I beat you to the follow. She saw right through that one.
Bubbles are all about asymmetry between supply and demand. And what you're seeing is the construction of the supply side of the AI economy. By the way, that's going to take several decades because you got the power, you got the chips, you got the networking that all needs to be constructed. It's going to be about diffusion. And diffusion, or the consumption of it, the supply side, is really dependent on skill sets, mindsets, data sets, change management. There are a lot of different factors associated with diffusion, and that's what we're talking about here at Davos.
How big is the appetite right now for the likes of Palantir or Microsoft, your former employer, to keep investing in the fiber, in some of this highly capital-intensive assets that they've already poured billions of dollars into?
So they've poured billions of dollars into a lot of different kinds of assets, and they all need to be connected. It's critical infrastructure. You cannot run AI without it. AI needs data. Data needs data centers or compute, and that compute layer needs to be connected. So we're actually quite close with them, and we're constructing ideas for how we bring more value to the story. That digital platform, we've integrated it natively into our fiber optic layer. And what that means is we can provide new capability, new performance, new speed. It's more secure than anything they've ever worked with before. And we're collaborating in doing so.
So who's your next collaboration? What do you have your eyes on?
That's for me to know. And,
for me to ask about.
To share later.
Yeah, exactly.
We're working with a number of technology companies to bring integrated solutions, AI-ready solutions to their customers to accelerate their time to market and their time to value. And so see more for detail.
Watch this space.
Soon.
Are we making announcements this week? No, too soon?
Well, we're in quiet period for earnings.
Okay. All right, okay. We'll
Maybe
wait.
not this week.
Kate, thank you. It's good to see you.
Thank you.
Kate Johnson there. Wonderful. Fantastic to catch up with the Lumen Technologies president and CEO. Tried to sneak in a little bit of a bubble question. I think Kate's a bit too sharp for that.
She was like, all right, I know what you're asking. You're going to say, is there a bubble? The
She had
answer
like
is
1,000
no.
different flavours of that over the last 12 months, I'm sure.
Who hasn't?
Let's get you an update on news elsewhere. For your top stories, your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Taiwan says China sent a military drone into its airspace for the first time. Taipei says the reconnaissance drone was in the airspace for about 4 minutes early Saturday, above the range of air defense weapons. It comes as Taiwan's defense ministry says it wants to acquire an extra 200,000 drones and 1,000 unmanned vessels using a special military budget. President Trump threatening to impose a 200% tariff on French wines and champagne. The president taking aim at French President Emmanuel Macron after he rejected an invitation to back Trump's latest peace initiative in Gaza. President Trump publishing a text message from his French counterpart in which Macron invited Trump to have dinner in Paris Thursday. BlackRock's Rick Rieder making the shortlist to replace Fed Chair Jay Powell. Sources telling us here at Bloomberg President Trump's interview with Rieder last week went well. The search is now a four-man race again. Treasury Secretary Scott Bessent saying the president could announce his pick as soon as next week. And that is your Bloomberg brief. Sean.
Vonnie, thank you. Very cool. Thanks for the update. More from Vonnie in about 30 minutes. Up next on the programme, building around tariff uncertainty.
Frankly, a lot of them are pretty optimistic about M&A. They're optimistic about economic growth. Where they're uncertain is tariffs. So they have to plan for resiliency. They're basically building resilient systems because they don't know what's going to happen on tariffs.
Live from Davos, Switzerland. Lisa's been talking about this for the last couple of hours. She mentioned the Europeans being overly emotional about the price action.
Okay.
And the Americans would wake up, step in and buy.
I didn't say overlay. They've been soothed.
That's what's happening. On the S&P 500, we recovered just a little bit. We're down by 1.4%. On the Nasdaq, down by 1.6%. But the story, in many ways, remains the same. Sell-off in the bond market, dollars weaker. Sell-off at the back end of the curve, 10s and 30s, bond yields higher. Can see them higher by 6 basis points, up around 8 on 30s. The move in Japan, phenomenal. We're talking about a 20 to 30 basis point move at the long end of the Japanese curve. We'll save some time for that in the next hour. Check out foreign exchange, though. Dollar weaker against everything in G10. And that's what got my attention first thing this morning. I was expecting a risk aversion. You all were. Would we get a flight to safety in the bond market? No. Treasuries sold. Would we see anything in foreign exchange that supports the US dollar? No. The dollar sold. Smells like April. Looks like April. Will it stick?
And that really is the key question. Will it stick? And overly remains to be seen, because that might ultimately be the right vote. But right now, it does seem like when people come into the U.S. hours, I'm getting messages saying it's not all about Greenland. It's about what's going on in Japan. It's about potentially Taiwan, et cetera. At the same time, there is a flavor of what we heard last April.
Also, potentially on Friday, the president told Kevin Hassett, I loved you so much on TV, I might need to keep you where we are. We actually saw movement in the bond market. Potentially, investors are thinking a more credible candidate, or they're pricing in a hawkish candidate like the other Kevin.
A more hawkish Kevin Walsh, perhaps. Something we can discuss in the next hour as well. In the next week, we might actually find out who the next Fed chair is.
I mean, 2 weeks.
Waiting for
I thought it was 1 week now. Maybe next week.
I was told in April it was going to be the fall. And now we are sitting here in Davos in January, and we still don't know the Fed chair pick.
Sitting here in Davos, obsessed with tariffs once again. Under surveillance this morning, building around tariff uncertainty.
Frankly, a lot of them are pretty optimistic about M&A. They're optimistic about economic growth. Where they're uncertain is tariffs. So they have to plan for resiliency. They basically building resilient systems because they don't know what's going to happen on tariffs. I actually think, and I hope, that the Supreme Court may take away the IEEPA authority.
That was the former House Speaker and current Teneo Vice Chair Paul Ryan. Joining us now, Gita, Gopinath, the Harvard University Professor of Economics and the former IMF First Deputy Managing Director. Gita, good to see you.
Great to join you.
Thanks for being here. You've penned a fantastic piece recently about how much has changed, because I think there's a temptation to sit here to look at what markets did over the last 12 months, the amount of business investment we've seen, particularly directed at America, and say nothing's changed. How much has changed?
I think everything has changed for the global economy. Now, if you look at the headline numbers, which in terms of global growth, you'd say 3.3% is what's projected for this year, 3.2% last year, you think, well, nothing really changed. And I don't like the word resilience being thrown around, because it's not as if countries were able to deal with tariffs and not get affected by it. Tariffs did have a negative effect. It was a headwind even for the U.S. economy. It just got offset by a lot of positives, including AI, including expansionary fiscal policy. So let's not mix the underlying changes that are happening, which will show up over time. It will take time, though we're seeing new developments that maybe it'll be faster than we think. But let's see.
When you say they'll show up over time, in what ways will they materialize?
So firstly, I think the uncertainty is actually consequential, and that takes time. You know, after Brexit, the first 2 years after Brexit, investment actually went up, and everybody thought, well, we're making a big fuss about nothing. And then slowly investment slowed down, and then 10 years later, it looks really bad. I'm not saying that's the exact effect that's going to happen on the US, because it's a much more closed economy relative to the UK, but those effects are going to play out over time. Interest rates are, I haven't checked the most recent numbers, but until yesterday, they seemed very squeezed in terms of the spreads that we're seeing everywhere. Financial conditions look really easy. It seemed like there was only one way to go up in terms of financial conditions, which is a tightening. And I think you just mentioned before we started that we are seeing that.
Yeah, we're seeing that when it comes to Japan. In the U.S., though, there is a hope that there is going to be this rate-cutting cycle that will continue amid the growth. Do you think that that's misplaced, or that could come at the consequence of what we're seeing right now in the dollar?
I think that we have a risk that we may be underestimating what inflation could do in 2026. On the one hand, yes, because there's been a productivity, positive productivity growth, that helps with inflation. But given the fiscal stimulus that's there, it's coming out right now, continued spending on AI, tariff effect that still has to play through, the dollar weakening, all of that could generate inflation going up. Now, what does that mean? I think regardless of what the central bank position is going to be, the long end of the yield curve will go up. Because either they raise interest rates and that causes the long end to go up, Or you think this is too dovish a central bank, inflation is going to be high, that causes the long end to go up. So I think that's the risk that hasn't truly been, I feel, been priced in fully.
Is a move at the long end of the yield curve in the United States more a function, in your view, of what's happening globally and the fact that Japan, as John was mentioning, used to be sort of the peg that was the base for the entirety of the bond market? Or do you think that this truly is a consequence of some of the policies coming out of Washington?
So firstly, I will agree that Japan is very consequential. If interest rates are going up in Japan, given the carry trade that exists, it has spillover to all markets, including the U.S. But I do think what's happening in the U.S. market is also driven by U.S. policies. The administration is aware of that, which is why, as you can see, they've shifted the supply to the short end of the yield curve as opposed to the long end. One of the reasons we haven't seen as much of an increase in interest rates at the long end is because they're really supplying now at the short end. If interest rates have to go up because of inflation, that's just going to worsen the fiscal situation and then push up the long end again.
The dynamic you described, Gita, is precisely why we're seeing the dollar weakness that is materialising and developing before our eyes. You see it right now this morning, Lisa, weaker against everything, against the major currencies in G10.
Yeah, it's the reason why you've seen such a bid into gold, which raises the question, how much further can this go? And are we seeing a real devaluation that goes well beyond even in the currency cross of the euro-dollar?
None of it matters. We've got the warm embrace of big tech. You wrote about that recently too, I believe, in The Economist. Can we breathe some life into that article once again? There is a sense of comfort in America because of the amount of spending a handful of companies are doing. Do you think we're becoming too dependent on that? And that concentration risk, is that something we need to appreciate a little bit more this year?
Yeah. So when I wrote about this in October, it was early October, at that time I said about $35 trillion of wealth could be eliminated if we had a dot-com style correction. Since that article and towards the end of October, I do think investors have become much more discerning. Meta got penalized even though they had better than expected earnings, but they said they were going to spend a whole lot on AI without being clear about where the revenues would come from it. So I actually think markets have become more discerning. But that said, I still see a bit of inconsistency between valuations of all these companies, not just those on the market, but also off the market, and the possibility of all of them earning that large profits. I just don't, that's a bit of an inherent inconsistency.
Is this the most fragile part of financial markets right now, the AI trade?
I would say that is certainly one of the most fragile parts. The other one is on the bond market side. I think there it's been too comfortable there.
Does it give you at least some optimism that when it comes to AI, you see, at least in the United States, a tremendous amount of fiscal backing for these kind of build-outs?
The support for it in terms of incentivizing investment is great. I don't think the problem in AI is underinvestment. There's plenty of investment happening, so they don't need any more incentive. I'm sure that AI will be transformative. Productivity, I think, will go up for sure. Whether that translates into profits in this hyper-competitive environment is what I'm questioning.
And this is one of the reasons why people keep talking about the race between the U.S. and China regarding AI to be unique, because in the U.S., it's all about coming up with the hyperscalers and building out the infrastructure. In China, it's more about the software, it's more about the deployment, it's more about the energy creation. Do you see, in general, China getting an upper hand when it comes to attracting flows and some of its output and how it will be used in the rest of the world?
Firstly, I think China is doing a lot more on energy, it's just building out a huge amount of energy so that it can support its AI business. You're right, they're more focused on applications as opposed to foundation models. But that said, we saw DeepSeek. So to my point about the ability of all these firms to earn the kinds of profits they do, it's not just competition from within the U.S., but it's also competition from China.
We're going to spend some time together, I believe, talking about some of these issues. I also want to talk about what's happening with the disconnect. I think this year, coming from 25 into 26, is defined by a massive disconnect. You've talked about an equity market being at an all-time high, credit spreads are super tight. That despite the chaos around us. Headline risk super elevated. One thing that's dominated this program for the last 12 months is the fact that payroll growth has been very muted and earnings have been very high. And it feels like that spread is going to have to reconcile some way or another, and maybe politicians might force the issue. When the president addresses this forum tomorrow, yes, it's going to be about trade and some geopolitics, but it'll also be about affordability. Do you think that the status quo can persist, the disconnect that we just described?
There is a great deal of unhappiness with affordability everywhere in the world, and you see that in the U.S. too. And tariffs have played an important role. About half to a 0.7 percentage point of inflation is coming from the tariffs. So they have had an impact, even though U.S. firms have absorbed it. I think we should all recognize, and I did research on that last year, which is to say that the costs of the tariffs have been borne by American firms. Some of that has been passed through to U.S. consumers. We haven't seen manufacturing jobs come up. In fact, manufacturing jobs have been lost. And U.S. stock markets did okay, but they did worse than Europe and other emerging markets did. So it is negative on many dimensions.
Just lastly, you are no longer a part of the IMF. What is the role of the IMF and some of these global organizations at a time like this?
I mean, the foremost role of the IMF is to be the lender of last resort. We see enough risks on the horizon that for them, delivering on that role is going to be critical. The other aspect is surveillance, which they'll have to do for all parts of the world. Of course, I think they're going to be a little more guarded in terms of what they actually say. But both these roles are absolutely important.
Why do we have to be so guarded in this environment? Why can't we be explicit and just speak truth to power?
Well, I think, what is it called? Strategic patience? That's what everybody throws around. Yes.
Gita, it's good to see you. We'll catch up tomorrow. Gita Gopinath there, the former IMF First Deputy Managing Director on the situation dominating global markets and the economy. And there is a disconnect. We talked about it throughout the whole of last year. Is it a disconnect that needs to be reconciled this year?
Right now, we're seeing it get reconciled on a political level, at least with rhetoric coming out of everywhere, and we're seeing that in Japan. One reason why people keep watching the bond market to reconcile these two is going to take money, and that's something that increasingly is in focus.
Coming up next, the third hour of Bloomberg Surveillance will catch up with the IBM Vice Chairman Gary Cohn, Southern Company CEO Chris Womack, CoreWeave CEO Michael Intrator, and the President of Finland, Alexander Stubb. A stacked hour just around the corner.
This year, we think it's a story about broadening.
We're in a period where investors can have more confidence.
The key issue here is really on the risky asset side.
There's just more vulnerability on the volatility side.
We want to stick with earnings, which we think are going to be the driver of equity markets over the course of this year.
Bloomberg Surveillance, live from Davos, with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from Davos, Switzerland this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Check it out. Equities down across the board, recovering slightly on the S&P, on the NASDAQ. The sell-off in the bond market, though, it's the Sal America trade making a comeback. Yields are up, and the dollar is weaker. This is what we saw play out last April. It didn't stick too long. Let's see if it changes. But that's the story so far this morning. It's about trade and the relationship between America and the continent. There's a little bit of Japan playing out in this story as well. We'll breathe some life into that over the next hour. You'll see it in Japanese yields much, much higher at the long end of the curve. But the main event at the World Economic Forum is about a day away, 24 hours out, 2:30 local time. The President of the United States addressing this forum, and markets, not just European politicians, slightly on edge.
Yeah, slightly on edge, especially because of what we've heard over the past 48 hours with the potential to increase tariffs substantially on Europe, not to mention 200% tariffs on French champagne. A real concern here about what we're renegotiating, whether the peak tariff uncertainty really is behind us when, once again, this is being used as a tool over what? Greenland. Again, if this was on your bingo card, well, you deserve to get a check for a lot of money. That Greenland would be the focus of this Davos.
President Macron not popular in the White House at the moment, it seems, at least for the moment.
Not popular because the president is leaking private text messages between Emmanuel Macron and President Trump. And Macron really trying to say, I really like what you've done in Syria. We've had so much collaboration, but I don't understand what's going on when it comes to Greenland. And Greenland has really become this huge distraction and almost an existential crisis for the Europeans. But I think those individuals that are constructive around the president, a distraction as they try to negotiate other deals right here in Davos.
We're all trying to figure out what's going on. Let's take a step back and think about the president's first term. Whether you like tariffs or not, there was a well-articulated argument about a lack of reciprocity in a place like China, and that justified why they went forward with the tariffs they went forward with. Coming into the second term, tariffs are being used for a whole range of things, including revenue, including geopolitics. It just feels like, Lisa, that is a massive change compared to what we saw 8 years ago. And when you look at things that way, it's difficult to get your hands around a clear ideology that helps you predict the moment, helps you forecast, helps you price it in financial markets when things can change from one weekend to the next so drastically.
It's a great point, especially because the legitimacy of the tariffs before was part of the negotiations that led to a deal with Europe that a lot of people didn't like. This time around, a lot of European leaders are saying this is a red line because we don't understand how far you can go, at what point we have a deal, at what point it can be renegotiated. And it's the reason why the market is taking this a little bit more seriously, because it feels like potentially this is really igniting something different in the leaders of Europe.
Two things to note, too. 10 a.m. today, the Supreme Court will be meeting. It's an opinion day. We could get the tariff decision. And all of these tariffs the president is talking about, the reciprocal tariffs, he used IEEPA, and that might be struck down at the Supreme Court. The other thing I think we need to remember is the president went to NATO in his first term. He ran out of meetings. There was all this chaos. But at the end of the day, he got to a destination he wanted. He anchored it to the extreme, and he got to a destination was that Europe is spending much more on the collective defense. Potentially Greenland is part of that. Anchor it to the extreme and get to a destination of travel. He spoke about Greenland in 2019, how it was critical for NATO, how it was critical for national security and its defense.
That's policy. Let's talk about business. 2 hours of conversations already, and 2 hours of conversations about a lot of optimism around America. That's still the story. Look, I know a lot has changed in the last 12 months. We talked about that with Gita Gopinath just moments ago. But how much money is being invested in the US economy? How big are these bets the big tech firms are taking? They're absolutely massive, and they're still making them. And when you ask CEOs around the world, what's the #1 destination for capital? Overwhelmingly, the favorite still, the United States of America.
It's big tech versus politics, and here in Davos, it's facing off with one another, and you've got the big tech quotient, and you've got all of the business leaders leading into that story because the politics one, messy and unclear.
And tech won in the last 12 months, and you saw that in the equity market. Coming up this hour, we'll catch up with the IBM Vice Chairman, Gary Cohn. We'll speak to the CoreWeave CEO, Michael Intrator. Look out for that. And plus this, a headline act a little bit later on. The Finland president, Alexander Stubb. We begin this hour with stocks extending their sell-off as President Donald Trump's push to take control of Greenland is sending fresh volatility into markets worldwide. The IBM Vice Chairman and former NEC Director, Gary Cohn, joins us now for more. Gary, good to see you.
Thanks for having me.
Hey, you heard the way we opened the programme. There seemed to be a concrete ideology when you were alongside the president in his first term. How would you describe this moment? What is this all about?
No one knows for sure. But I think what we've seen evolve in the Trump presidency is this desire to negotiate and get a deal. So ultimately, is Greenland all about getting a deal? We know that the North Atlantic is becoming much more of a sought-after territory from a militaristic standpoint. So I understand the president's concern to have a military presence and protection of the North Atlantic. As if we want to expand our air defenses, Greenland is a pretty strategic spot. So I understand what the president's interest is. They also have rare earths, which is something that we in the United States can't supply to ourselves. So the question is this a negotiating posture to get a deal with Greenland, to get more rare earths, to get a larger naval and air force presence? And it may be. It does seem like that's on the table, and this may all evolve in a place where the United States ends up in a very good strategic position.
Do you think that's the way the business world sees it, coming into the World Economic Forum this week?
I think the business world's split on it. You've obviously got a European presence here and a U.S. presence here. I think the U.S. presence is a little bit more optimistic that this is going to end in the right place, and we've seen this before. I think the European contingency is a little more leery and say, look, maybe you're confident this ends well. We don't like being in the middle of this right now.
Which is a reason why, in European hours, treasuries were selling off much more. The dollar was much lower. And as the U.S. wakes up, people are coming in and buying it. How much is the Sell America trade real, and how much is it a perception based on these moments, the ones that we saw on Liberation Day?
Look, there is some Sell America going on right now. I've met with a couple different asset managers this morning, said that global funds are reallocating a little bit out of the United States. So you see that, interest rates are higher, so people selling bonds, rates go higher. People are repatriating currency back home. They're selling dollars to buy local currency. They're selling stock market. They've got to repatriate currency. So I think we're seeing a little bit of that. I don't think that's what's driving the overall market right now. It doesn't feel like we've got to liquidate America. It feels like we've got to trim around the edges in asset allocation models going on.
This goes back to the wrestling match we were describing. AI on one side, you've got politics on the other, and they're facing off, and it's sort of sell America until AI rears its head and gets to the lead, and that's what we're doing.
And it's sell America till the light turns green and everyone has to buy America again.
Right.
Because in the real reality, if you look at the U.S. economy and what's going on, we've got one of the strongest economies in the world today. We're growing at 5+% growth. We've got a pretty good tailwind going on behind us. I mean, right now, the only thing stopping is all this geopolitical risk. If and when, and I say when, this geopolitical risk settles down, the market's probably going to take off again. That's been the history of this pattern.
Settles down. Gary, 2.5 weeks ago, we captured Nicolas Maduro. It feels like a decade ago. Now we're sitting in Davos talking about Greenland. You think geopolitics will settle down under a Trump administration?
2 weeks. Yeah, we're going to settle down. I think that there's a couple balls up in the air right now.
Well, a couple.
But, this too shall pass. We can go back in the last 8, 12 years, and there's been periods of time where we've had these, highly volatile geopolitical moments. We're in a highly volatile geopolitical moment right now. And by the way, I'm not sure it's a coincidence that Davos is right in the middle.
All right, interesting. I want to ask you about the Fed chair race, because you were in the room with the president in Trump 1 when he decided to go for Jay Powell. What kind of questions do you think he's lobbing at these individuals? And in the end, who do you think it's going to come down to?
Look, the president's in an enviable position right now. He's got what we know. He's got 4 really highly qualified candidates. Any one of those 4 could do a really good job in there. I think the president at this point is trying to understand the sort of mindset of the person he's going to put into the position. The president clearly has a view on what interest rate policy should be. The problem or the opportunity with the Fed job is once he appoints someone into that job, they're an independent agency, and he loses his day-to-day contact with that person. So I think the president learned in the first administration that it's very important to who he puts in that job, and that he should make sure that he's very comfortable with their policy mandate before he appoints them.
Do you think it's become even more important now that individual needs to have the ability to persuade the rest of the committee in a way that maybe a few years ago that wasn't as relevant? There's just a sense on Wall Street that the president's approach in the last 12 months has galvanized the rest of the committee to dig in.
Look, I think the committee structure is going to be the committee structure. I'm not sure if the chairperson can ultimately sway the committee that far. Could they sway 1 vote or 2 votes potentially? But you've got some very strong regional bank presidents. You've got some very strong governors in the Fed. I think the Fed ultimately at the end of the day is going to be a tough group to persuade. I think they'll come out in the right place. I mean, historically, the Fed has done a very good job. Have they been a little bit late? Yeah, they were late in the transitory inflationary problem of COVID. But they've caught up. They've gotten to the right place. And I think if you look at the Fed through the cycle, they end up getting to the right place.
You were diplomatic about the 4 candidates. Can I just talk about some of them individually? Governor Chris Waller. You can too.
Yeah, you can.
Governor Chris Waller, I believe you were part of that process, right? Mm-hmm. Vice Chair Clarity, you were part of that process too. What was the president's approach to that process back then? Was he as involved as he appears to be now?
He was not as involved then. But remember, he was a first-term president who was an outsider to Washington. That was part of his mystique, as he was an outsider to Washington. He knew he had to put someone into the Fed chair's role, and he approached it. But I think now, understanding the importance of interest rate policy and understanding his view of interest rate policy, he's taking considerably more time talking to the various candidates.
I'll ask you the question that might get you in trouble. Is Kevin Walsh a chameleon? Is he a hawk? Is he a dove? Is he whatever it takes to get the job? Why didn't he get the job last time?
Look, Kevin is highly qualified.
Without a doubt.
Kevin has served in the Fed.
Without a doubt.
Kevin was there during some of the toughest days of the Fed during the financial crisis. I personally was dealing with Kevin on an hourly basis as we were trying to figure out what was going on in the United States financial system. Kevin was an active participant in the outcome that we all benefited from. And without Kevin's wisdom, I'm not sure we would have ended up in the same place. He's a highly qualified candidate.
It sounds like out of the four, that's who you'd like to see in the seat, based on that strong defense of Kevin Walsh.
I think Kevin Hassett's a great candidate. I worked with Kevin Hassett when I was in the White House. He was the CEA director.
Share your thoughts on Kevin Hassett.
Kevin Hassett was an excellent CEA director.
Let me tell you what some people say about Kevin Hassett, that if he's appointed, that's a puppet of the President of the United States. He'll sit there, smile, and do whatever it takes. Is that unfair?
You know, you and I both know, whoever gets appointed, there will be people that are disappointed and will have negative things to say about him. On the flip side, there will be people that will be very happy with whoever one of those four gets appointed. And if it's a fifth candidate we haven't seen yet, they'll be equally as happy with that one.
There is a sense that whoever's going to be there, they're going to cut rates. How much is the entire build out of AI, which is what you spend most of your time talking about here, based on the idea that the Fed is going to be easing policy no matter what?
Like the AI build out and rates, they're linked, but they're not inextricably linked. This AI build out is being built because there's demand, there's forward demand, and the AI companies feel like they are behind the curve in being able to facilitate the needs of their clients. They are going to build these data centers. The only question that rates have is what is the ultimate all-in cost to build these things? And interest rates are going to be important. These are big, huge CapEx expenditures with 30-year lives. So, you know, the amount of interest you're going to pay to finance one of these centers is important. So 25 or 50 basis points has a lot to do with these decisions. But I will caution you, like I always do, the Fed only controls Fed funds. They control overnight rates. You've been talking all morning about the 10-year. The 10-year is at 4.30. Where these data centers are going to be financed, they're going to be financed to the medium, to the long, to the very long end of the curve. It's going to be a combination of duration. Fed funds is not going to affect that. So Fed funds could possibly go down, and the interest rate to finance a data center could be unchanged.
Do you miss the trading floor?
Of course you miss a trading floor.
Yeah, I get the feeling you miss the trading floor. Can you imagine how scary things were back at Goldman back in the day?
But that's when
first year analyst, Gary's walking the trading floor.
Yeah, I think that he would have probably.
But John, that's when there really were trading floors. Right. Like you actually stood up and talked on phones and spoke to each other. And
did it prepare you for the West Wing?
Now it's machines. Now it's machines.
Did it prepare you for the West Wing?
It did. It did. It very much did.
In what way, Gary?
Just, I think the ability to be watching 5 different things going on at the same time and be listening in 5 places. People in the White House were always amazed that I could be like having a conversation over here and talking to someone behind me because I heard them talking. But when you grow up in a trading floor and you grow up in a trading environment, your eyes and ears have to see everything.
With one eye on JGBs this morning as well.
Yes.
Gary, thank you. It's good to see you.
Thank you.
Thanks for sharing some of your experience. That was Gary Cohn there, the IBM Vice Chairman. Let's give you an update on news worldwide this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Treasury Secretary Scott Bessent is urging European allies to remain calm over President Trump's Greenland claims. Speaking in Davos this morning, Secretary Bessent compared the uproar to the political throwback over President Trump's tariff announcement last April. He also dismissed suggestions that Europe is retaliating by dumping U.S. treasuries, calling that a false narrative. Apple regaining the lead in China's smartphone market after iPhone shipments jumped 28% during the holiday quarter. According to research firm Counterpoint, the iPhone 17 drew in consumers, with Apple's handsets accounting for 1 in every 5 shipments. Rivals Huawei and Xiaomi experienced double-digit percentage declines. Indiana University has won the college football national championship after defeating the Miami Hurricanes 27-21. The Hoosiers finished with a perfect 16-0 record, winning their first ever national title in program history. Quarterback Fernando Mendoza became the 8th Heisman Trophy winner to win a national championship. And that is your Bloomberg Brief. John.
Hey, Vonnie, appreciate it. Thanks for the update. Up next on the programme, we'll catch up with the CoreWeave CEO, Michael Intrator. From Davos, Switzerland, good morning. What a start to our coverage here at Davos, Switzerland, at the World Economic Forum. Day 1 for the team here at Bloomberg Surveillance. On day 2, it's all about the president's address to this forum. Europe very much on edge, and I have to say markets were too. Things are recovering slowly going into the cash open. Equities are off the lows on the S&P 500 and on the Nasdaq. This was a theme that you were leaning into, Lisa, earlier on this morning, that when America woke up, when the US session started, there was a chance that this dip would get bought.
There was a whole day of discussion, of rhetoric, of trading without the U.S. participating because of the holiday. And so there was a lot of discussion around Greenland really just permeating through every bit of action. Now suddenly there's more discussion about AI and growth and all sorts of other things coming from the U.S. audience.
Without a question, though, there are questions about the risk mitigation characteristics of treasuries. I don't think that's going away.
No,
You're not seeing that flight to safety, flight to quality, at least in the treasury market. Yields were elevated, even as equities were down and down hard, and that's a theme for us again this morning.
And as you've been pointing out all morning, the dollar has been weaker in tandem with those higher yields. So something is going on. My spidey sense has a sense that maybe this time feels a little bit like a repeat of April. And frankly, as we heard from Gary Cohn just then, we do see a shift in allocations, a diversification away from the United States.
The opening bell about 1 hour and 10 minutes away. Let's talk about AI. And one company at the epicenter of this whole theme in the last 12 months, CoreWeave. The CEO, Michael Intrator, joins us now for more. Mike, good to see you, sir.
Thanks for having me.
How difficult has it been to keep up with demand in the last 12 months?
So it's not the last 12 months. It really has been a sustained issue across the space. So not just for us, but for really all of the companies that are trying to serve infrastructure to AI models that are being used by enterprise, that are being used by governments, that are being used by retail. It's really been a relentless and voracious requirement to continue to build infrastructure as fast as you can.
What are the big constraints at the moment?
So the constraints are really around our ability to bring up powered shells fast enough to be able to manage this incredible spike in demand. Over time, as the markets do what markets do, which will be to address the infrastructure issues, the constraint will move to power. The constraint will be from fabs and their ability to generate more chips and memory, and so it moves around. But right now, the single most difficult issue is really to focus on the powered shells.
There's some skepticism around the industry, just at large, but in particular around your company. There was a recent lawsuit having to do with overrepresenting capacity on the part of CoreWeave ahead of the IPO last year. What's your response to that type of skepticism and that claim in particular?
The company will vigorously fight that claim. We believe that it's baseless, and there's an enormous amount of information out there about the company, about demand, and about our ability to build it and when we're going to build it. And so, these things happen, but we're not terribly concerned about that.
Your IPO is in March. Your shares are up 130%. It's not a terrible performance, I will say. There is a question about whether there are constraints building in financing markets. When you had that $2 billion debt sale, there was a sell-off in shares, a question around how well you could finance this in an efficient way. How are you dealing with that? Does it challenge your ability to use the debt markets going forward?
So there was a brief sell-off, which actually recovered through the rest of the day. So, I think that there is a significant amount of appetite in the markets for products that can be underwritten, where the offtakes are from credit-worthy entities, where you have a company like CoreWeave that has built an incredible reputation around our software and about our ability to integrate, the NVIDIA's GPUs, which are the best silicon solution in market, with the best software solution in market to deliver the best product in market. And, the capital markets have been very, very receptive to that and will continue to be receptive to that as long as the products are structured correctly and the counterparties are strong. We don't see any lack of demand for in the capital markets to build the infrastructure we need.
Have we been talking all morning? There's really this push-pull at Davos when it comes to the politics and geopolitics and AI. And the president's going to talk about affordability, and you recently had governors from blue states and red states at the White House basically telling tech companies they need to subsidize American consumers. When you see these hyperscalers, how do they make sure that they are maintaining the grid, not just for themselves, but keeping prices lower for Americans?
Yeah, so look, the politicians, they're balancing many priorities as they're thinking about artificial intelligence, as they're thinking about affordability, as they're thinking about geopolitics. All of those things are coming to bear on how they think about and how they frame this discussion. Around the affordability component in particular, we believe, and we have aggressively taken the position that it is important that companies that are building AI pay their fair share of the requirements to deliver power to these data centers. It's going to be important in the short term, and it's going to be important in the long term as artificial intelligence continues to permeate the economy. And, there's a great opportunity for us to really kind of build out a system to be able to ensure that we're playing that role as we continue to scale this business, which is so important for so many different aspects of society.
Just quickly, and I understand it's a complex question, so forgive me for the time constraints, but how do we value the lifespan of a GPU? It feels like that's like the key question right now in financial markets, and you're at the heart of it.
Yeah, so look, I'm pretty aggressive about this, right? Like the way that I conceptualize how to value the depreciation curve or the obsolescence curve of technology is a function of our clients and what they are willing to pay for. There is no argument that will get me to concede that a GPU becomes obsolete when I have clients who are the smartest, most experienced users of this compute that come in and buy compute from us for 6 years. They know new technology is coming. So the idea that this technology becomes obsolete or useless after 3 years or 2 years, it's bunk. It's a narrative that's been put out there by people who are trying to influence the discussion around a stock. But the truth of the matter is, if Microsoft and Meta and NVIDIA are buying compute for long-term contracts, they know new technology is coming and they're going to buy it anyway because they know it's got value.
At the heart of the price action in the last 24 hours, a dispute over Greenland and tension rising between Europe and America. The French President Emmanuel Macron addressing the World Economic Forum on this very relationship. The headlines just crossing moments ago.
Yeah, absolutely. He's talking about the fact that Europe must defend multilateralism. What you hear Emmanuel Macron talk about is plenty using one of their most volatile things that they can go into their toolbox, which is this anti-coercion rule, which means more tariffs, maybe going after tech companies. This has struck a nerve in Europe. What I get from European officials is they feel existential here at Davos. Americans are kind of shrugging it. The Treasury Secretary this morning said, sit back, take a breath, which just like April 2nd when it comes to the hysteria, it feels like the Americans are looking for a deal and they're ready to negotiate right here.
Understandably, it's emotional on the European side, and we'll see if those emotions settle down when the President addresses this forum tomorrow afternoon. Emotional in the markets as well. Things are recovering just slightly. Equity futures down hard throughout this morning, recovering just a little bit and off session lows. The S&P 500 was down by close to 2%. You can see the recovery so far this morning in the bond market as well. Yields were much higher than where they are at the moment. 10-year bond yields getting close to 4.30, just backing away at 4.27. Let's get you some morning movers with 60 minutes until the opening bell. Here's Danny Berger with more. Hey, Danny.
John, let's start with one of the positive stories this morning because a lot is down, and that is an acquisition by the UK drug company GSK. They are buying the pharma company Rap Therapeutics. They make immunology and anti-inflammatory disease treatments. Those shares up 63%. The premium that they're paying is about 65%, so we're almost there. It is a $2.2 billion deal. I actually want to show you one area of this market that does seem to be leading some of the losses. As you pointed out, John, they have eased, but we still are looking at Western Digital, SanDisk down at least 1.4%. Micron's down just a third of 1%, but it is these memory chip stocks that have been the high flyers thus far in 2026 that have been hurt in the broader and especially tech-focused sell-off of this morning. Finally, we've been getting a couple regional bank earnings coming through. For the most part, the reaction to them has just been negative. The bar's been high. They've been rallying this year. Key Corp, they're faring the worst so far this morning, down 2.2%, even though they beat across most of their metrics, saying they're going to return shareholder capital. U.S. Bank Corp, that's up 1.25%. They're working through their acquisition of BTIG. And Fifth Third, they're working through their acquisition of Comerica. So that has been the theme for the U.S. regional bank earnings, is that they are getting bigger. John.
Danny, thank you. Looking forward to the coverage around the opening bell. More from Danny a little bit later this morning. Let's turn to energy. Investments in data center construction is expected to jump again this year, adding pressure to already soaring costs for households. A man who knows a lot about this is Chris Womack, the CEO of Southern Company, and Chris joins us now for more. Chris, good day to you. It's good to see you.
Good to be with you guys.
Can you help us visualize electricity demand over the last decade or so, and just describe how much things have changed in the past few years alone?
No, it's been pretty incredible. And at Southern Company, we've seen, say, over the past 3 or 4 years, demand being pretty flat. But of late, we're seeing upwards of 8, 9, 10% growth as we look into the future. So we're seeing incredible growth, incredible demand, incredible opportunity to serve these data center customers, which is an incredible opportunity that we're really excited about.
It comes with risk as well for society. The president has talked about affordability issues. I believe you yourself in the last 12 months addressing a Bloomberg event talked about the prospect of a revolution if we don't do something about this. Are we doing enough?
I think we are. I think there's a model about how to do this. And what I see working with data center customers in terms of them being willing to cover their cost, to pay their share. And when we do that, that provides us the opportunity to benefit all existing customers. So the model is there. What we see in the Southern Company territory is the ability to price it right for those data center customers and then provide incredible benefits to the rest of our customers as we have this growth and thus provide rate stability. So we've figured out how to do this across our territory. We know there's more communications to be done to explain that, but we see an incredible opportunity with this growth.
On Friday, President Trump announced that he was going to be selling energy directly to some of these technology companies, having an auction specifically for them. Do you think this is a good idea?
I think in certain places like the PJM Regional Transmission Organization, this makes sense because, they're having incredible price pressures. As capacity is taken out of the market, it's really providing some constraints. What's happening there is not happening everywhere. Like I talk about the vertical integrated market that we have in the Southern Company territory. We own generation and we provide services all the way through distribution directly to customers. And so we're seeing more stability there. But I think in that PJM marketplace, this will make sense and it's probably a good idea to help.
What's the right balance right now between allowing prices to be set by the market and preventing, as you were talking about, a revolution, right? At what point do you need extra capital to come in, extra support, in order to meet the demand that seems to be never ending at this point?
But I think the key in what we're finding out is the price we come to agreement with these data center customers. With this growth, and if you price it right, you price it properly, you have the opportunity to provide benefits to existing customers into those communities. If you get that right, growth can provide great balance, great benefits, and great price stability to all existing customers. So there's a model to do this, and that's what we're seeing that's working across our territory in Southern Company.
Chris, do we have enough energy, given the fact that actually this administration has made it clear they like some energy over others?
I think it's going to be incredible to really invest in all the above. I do think we have enough. Clearly, there's more growth we have to make. We're looking at building some gigawatts of power in our territory by the end of the decade. So there's a need to build more. But I think you have to make sure you get in the right markets, in the right structure that provides you the incentives to build. And then once again, making sure that we price it right, that the model is right, so that all customers benefit from this incredible opportunity that we're facing.
But when you say incentives, are there incentives anymore for renewables from the government?
Well, renewables now are economic. If you look at when I say all of the above, that's natural gas, but that's also battery energy storage. So bringing batteries online. So the economics now work out with renewables and as we make these kind of decisions. So some may need incentives, but a lot of renewables incentives are not necessary to move forward, to be a part of this mix.
Chris, have you noticed the regulator that you work alongside is taking a bit more of a pragmatic approach about the pace we should make this transition?
There's a lot of concern, but it's because there's a lot of people just don't have all the information and are not aware of all that is going on. There's a lot of information that we have to communicate. There's a lot of information data centers, the hyperscalers also have to communicate to educate regulators about what's really taking place. I think the critical part of all this, the U.S. must maintain leadership around artificial intelligence. And so we all must work collaboratively together to make sure we meet this moment, which I think we can, but we also have to make sure that we do this in a way that benefits all customers. And we see how this plays out in our territory, and I think it's going to continue to work and provide us with the growth that we need to have, but also provide benefits in a long-term way for all of our existing customers.
Chris, you've got a busy week ahead of you. We appreciate you making some time for us. Thank you, sir.
Guys, thank you very much.
Thank you, sir. Chris Womack there, the Southern Company CEO. Got some breaking news just moments ago. A headline crossed on a Bloomberg terminal. I'd like to bring it to you. A Danish pension fund to exit US Treasuries. We'll get you the broader, bigger story on that, but in the context of what's been developing in the last few days, the relationship between the United States and Denmark breaking down, not just over the past few days, but the last several months, that is notable, given the sell-off we've seen already in Treasuries earlier in the session.
Yeah, and this is what you hear in terms of the emotional response. It happened after Liberation Day last year, but you're hearing that on the margins from other pension funds too. The Danish pension fund in particular is in the hot seat just because of Denmark and Greenland and the whole situation there. Nevertheless, they're not alone.
Let's get you an update on news elsewhere this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. President Donald Trump said he will meet with several parties in Davos over his plans to take control of Greenland. The president said he had a, quote, very good telephone call with NATO Secretary General Mark Rutte and told him Greenland is imperative for national and world security. President Trump inviting world leaders to become members of his Gaza Board of Peace. Invitees include the leaders of Russia, Turkey, Argentina and Canada. According to a draft charter seen by Bloomberg, the Trump administration is asking countries that want a permanent spot to contribute at least $1 billion. French President Emmanuel Macron declining to join the board. If you're shopping for an engagement ring ahead of Valentine's Day, it might cost you a little less this year. Sources telling us here at Bloomberg that De Beers is cutting its official diamond prices for the first time in more than a year. The diamond industry has been hurt by a pullback in Chinese luxury spending and the rising popularity of synthetic stones. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thank you very much. Up next on the programme, we'll catch up with Finland's President Alexander Stubb, with tensions rising over Greenland. From Davos, Switzerland, you're watching Bloomberg TV. What a start to work after a long weekend stateside. Equities down and rolling over again, going into the opening bout negative by around about 1.5%. Similar move on the Nasdaq, on the Russell as well. In the bond market, a sell-off in treasuries, not too big given the backdrop we're talking about here. Japanese yields higher by more than 20 basis points. We're higher by 6. But a headline that crossed the Bloomberg terminal a moment ago, notable, given the tension rising between European and American partners at the moment. A Danish pension fund pushing to sell its holding of treasuries. Now, only about $100 million, as I understand it, Lisa, but still notable, given the pressure and the tension that's rising into this meeting.
And it is notable that the euro rose to a session high versus the dollar on this type of move. And it really builds on the emotion of the moment that we feel and that we hear from a lot of fund managers. Whether that type of shift continues, whether it is bigger than this particular fund, remains to be seen. Nonetheless, it is a flavor of what is being talked about here, and you cannot ignore that.
Are things going to settle down? The president threatening to impose additional tariffs on some European allies supporting Denmark while he pursues Greenland. The Finland president, Alexander Stubb, joins us now for more. Mr. President, good to see you.
Nice to see you.
Thanks for always making some time for us. Look, I would never traditionally start a conversation like this with a head of state, but given the news flow and the headlines and the pictures of text we've seen over the past few days, I have to get a better understanding from you directly. I understand you were on an exchange with the President of the United States where the President almost explicitly linked his failure to win the Nobel Peace Prize with a more assertive stance on Greenland. Did that actually happen?
Well, yeah, I mean, we do message a lot with the president, and sometimes I message together with the Prime Minister of Norway, Jonas Gahr Støre. So, yes, the response was as has been reported. And this is what frank diplomacy is all about. This is quite normal in our engagements behind the scenes, and it's good that we have these conversations.
You'll have to forgive me, but for many people, they don't feel that it's normal to connect the failure to win a prize with a more assertive stance over someone else's territory.
It is normal to have direct talks. Of course, on the Greenland issue, I disagree with the president. I think now what we need to do is to bring down the temperature. We need to find an off-ramp and probably create some kind of a process which will strengthen Arctic security. And sort of at the end of the tunnel, I wish we could have a NATO summit in Ankara where we all agree on a new Arctic security structure. I come from an Arctic country. I come from a country which has one of the biggest militaries in Europe. I come from a country which has the best know-how in Arctic defense. So these are the types of things that we need to work with the alliance, including the United States.
President Trump has been talking about Greenland since 2019. What makes it different this time? What does an off-ramp actually look like?
I think there's a short-term scenario here and there's a long-term. Short-term is to basically de-escalate the language, and I hope we'll see some of that here in Davos, here today, tomorrow, and the day after tomorrow. And then the second one is a long-term strategic thinking on, okay, is this an issue of sovereignty or is it an issue of security? I hope that it is an issue of security, and then we start looking at how we can beef up security in the Arctic region. Now, the latest conversations that I've had about this subject in the past 2 to 3 hours, this is how fast things are changing in the new foreign policy world, gives me a little bit of hope that we'll find a way.
It feels like a live negotiation. The president, a lot of the time, does come out with something very aggressive to get to an endpoint, which really is just a better deal. I liken this to NATO. At one point, there was reports he wanted to pull out of NATO, but really at the end of the day, he wanted Europe to spend more. Is that how you view this, through that lens?
Well, first of all, the President of the United States has a capacity to deal with a multiplicity of issues at the same time. I mean, you only look at what's happened this year. Venezuela, Iran, Greenland, Gaza, the Peace Board, and many other things at the same time. And of course, add on to that domestic issues. On the NATO issue, if someone would have told me at the 75th anniversary of NATO in Washington, D.C. in 2024, I think it was, that we are looking at increasing our defense expenditure to 5% next year, I would say, please go and see a doctor or consult the Foreign Affairs magazine, because this is not going to happen. Now, if at the end of the day after this, what could be called rhetorical escalation, we come up with a stronger Arctic security, then that is good. And obviously, we're seeing foreign policy done in a slightly different way from what we're used to. But, you know, I'm a Finn. I thought you'd ask the first question that, you know, what do you do? I said, in these kinds of situations, you take a deep breath, you go in the sauna, and you take an ice bath. And that's what we're missing. That's what we're missing here.
I've been to your embassy sauna where they have had diplomatic dealings done. It's quite a scene.
You could have the ice bath right there. Look, there is this question, Mr. President, about why European nations were sending more troops to Greenland over the past couple of days in the past week. At first, it was to beef up and show that they were serious about the security.
That's not what it was about at all.
Okay,
no.
so the way that it was taken by President Trump was to defend from the United States.
Yeah, I think there was probably a misunderstanding, or not probably, there was. So basically, let me explain. There is something called Arctic Endurance, which is basically a NATO training exercise. That exercise has 8 different components, all of which the United States is present. We were asked by our allies to go and do a reconnaissance mission to check out the territory, the landscape, and how it's going to work out. This is completely normal procedure. And obviously, I can't talk about the specifics of that exercise, but trust me, it is not trying to protect anything westbound. It's more eastbound.
At what point do you feel like you're just fielding calls because you're thought of as the Trump whisperer? I mean, what are you telling your colleagues in other European nations about how to deal with Mr. President?
Well, I think, you know, diplomacy, a lot of times when people analyze diplomacy, they look at it on a state-to-state relations. You know, what's the values, interests, power, culture, history, geography. But they forget that a lot of it is actually about person-to-person engagement. And the fact that I'm able to communicate directly with the president puts me as president of Finland into a good position. But I have no illusions about being a Trump whisperer. You know, he's the president of the United States. He decides completely for himself. I throw out a couple of ideas. Sometimes he likes them, sometimes he doesn't. And then I throw ideas to our other European allies and friends. That's what diplomacy is about.
When did you last speak?
We spoke, it was a collective phone call, I think in Paris on the 5th of December or Berlin. I forget when it was. But
with the president?
Yeah, but that was sort of a collective.
And the last message with each other was in the last few hours?
I think it's been made public.
That was the last time you spoke. That's the last time you messaged.
That's the time we messaged, yes.
The reason I ask this is I'm trying to gauge whether there was a misunderstanding. It certainly seems like you perceive there was a misunderstanding.
Well, my perception is that it was a misunderstanding. So now we need to, sit down, discuss, get an off-ramp, and at the end of the day, we need more Arctic security and with European and American presence.
This is clearly played out very publicly. And you've been transparent about how frank things are, often behind the scenes. But given how publicly this has played out, what kind of a message do you think this is sending to the Russians at the moment, the way this is playing out?
Well, anytime there is a diplomatic issue, to put it diplomatically, between us, the transatlantic partners, I'm sure that the Kremlin is enjoying it. I mean, and they will use it as they best can. As we saw, Foreign Minister of Russia, Lavrov, puts out a tweet and saying that for the U.S., Greenland is what Crimea is for Russia. And obviously, that's an insult. And we all understand that. So we always have to be careful with the Russians because they will use any moment and any possibility for good old information, warfare and propaganda.
The unintended consequences is just creates more of a positive attitude towards Russia and China and divides the transatlantic relationship. How big of a concern is that? Especially after we just saw Mark Carney go over to Beijing and say they have this new strategic partnership.
Yeah, I mean, I think, I'm very pro-European. I'm very pro-American, and I'm a transatlanticist. So it is in my interest and also based on my values that we have a closer relationship with the United States. That's why I'm also very pragmatic. I understand that the United States is the #1 superpower. And what we need to avoid, of course, is a certain disengagement. At the same time, I have to say that Europe needs to use this moment as well. It needs to beef up its defense. It needs to get stronger economically. And I think, my big thesis is that it's going to be the global south that decides the new world order. So that means that we need to engage more with the likes of India. I really liked the free trade agreement that the EU forged with Mercosur. And I think people will start looking a little bit elsewhere. But I really still want to contain and bring back the U.S. as best we can.
On top of Russia, on that conversation, I've been told that discussions are going very well between the United States and Ukrainians, the United States and the Russians. Kirill Dmitriev reportedly is here having a conversation with Steve Witkoff today. How much longer do you think it will take to get that deal done? Do you think Putin even wants a deal?
Okay, so 2 observations on this. The first one is that I'm afraid that the Greenland issue will take all the oxygen here in Davos from the Ukraine dossier, which I still think is fundamentally important and acute. But the second point is good news. I think ever since Jared Kushner came into the game, actually in Geneva right after the G20 summit, and we had another meeting in Berlin and then in Paris, we have a lot of more practicality. So we basically have, depends on how you count, 6 documents or 2 plus 5 documents. The good news is that Ukraine, the United States, and the coalition of the willing or Europe, we're on the same page. The big question is, are the Russians? I'm quite skeptical about that. I think we might get a deal on security arrangements. We might get a deal on territory, certainly on the prosperity package. I'm quite hopeful that we'll get something here this week. But then the Russians will say niet.
Well, if Russia continues to drag the United States along, do you have a sense of what Trump's red line is with Putin?
I'm not going to start interpreting the red lines of the President of the United States, but I have to say that I really like what he did on Lukoil and Rosneft on the sanctions. And to be honest, I mean, Putin lied to President Trump about the drones hitting his dacha. They fired ballistic missiles, so this is something that certainly will shorten the fuse of the President of the United States. And it, of course, depends on how much carrot do you put before you hit with the big stick.
Just a final question. We often ask our guests for forecasts at the World Economic Forum. I'm not going to ask for a long-term one. Where do you think we'll be at the end of this week?
I think we will have defused the Greenland issue. I think we will have made progress on Ukraine. And I am 100% sure that the world will not be finished by then.
Mr. President, thanks for your time.
Thanks.
I always feel underdressed in his presence.
Well,
every time. I've got to get a new tailor.
I always know what it is. Next interview,
like the sharpest man in European politics.
Next interview, golf course.
My sense is that I should be doing more saunas. and have
Clearly.
more ice baths,
Clearly.
and maybe I'll have that upbeat outlook.
I'm sure
for the
they'll
world
have
and
you.
such
They,
a
they
nice
host
event.
sauna parties at
Come
the
and
Finnish
do a
embassy in
special from
DC.
Finland.
There we go.
Fantastic.
You can do it from a sauna.
100% I'm on board.
We'll make it happen. Mr. President, thank you, sir. Thank you very much. Finland's President, Alexander Stubb. Coming up this week, our coverage continues. Morgan Stanley CEO Ted Pick, the Bank of America CEO Brian Moynihan, the US Energy Secretary Chris Wray, and the US Commerce Secretary Howard Lutnick, and a whole lot more. On day one for the team here in Davos, Switzerland, at the World Economic Forum, the team being Bloomberg Surveillance. The coverage will continue, and the sell-off is as well. The S&P 500 down by 1.5%. A sell-off in the bond market. Sell America on the margins, in focus, an address from the president in the next 24 hours. The agenda ripped up. We started the program by talking about how much effort goes into the World Economic Forum in Davos, Switzerland. Months and months of effort goes into it. Then the president sets his own agenda and everybody else gets in line. From Davos, Switzerland, good morning.